have a look at this chart over here. Now let me ask you, what is wrong with this chart? Take 3 seconds to think about this. The answer is this, is that there are too many support and resistance levels on the chart. And when you got too many support and resistance levels on the chart, you get analysis paralysis. This means that you are going to get conflicting information, right, that makes you feel at a loss at what to do. So for example, let's say, the market over here, it makes a pullback, a slight bounce, you want to buy, right? Because after all, look at this area of support, Rainer. Okay, fine. And then the market goes up higher into this green level. So area of resistance, resistance, resistance. Now, do you sell at this price point? Are you going to nod your head and say sell? Okay, if you sell. If you sell, right, then think about this. Didn't you just buy a few moments ago and now you're selling? And if you were to sell, then how are you going to ride the trend up higher? How are you going to ride the wave? Well, you can't, right? And that's the problem with having too many areas of support and resistance on the chart, is that you're going to get analysis paralysis, right? Every decision that you make, right, somehow there's another piece of evidence telling you that you are wrong, and you always feel lost and confused. So if you feel anywhere along those lines, don't worry, because in today's training, you will learn, number one, why support and resistance, they are not equal, because there are times support is more powerful than resistance, and there are times resistance is more powerful than support. So you need to identify the right times to know which to pay attention to. So this way you get less analysis paralysis, less confusion, less frustration. Number two, how to draw accurate support and resistance levels so you can better time your entries. When exactly should you buy when the price comes into support? Because I'm sure there are times when the price comes into support, you thought, man, it's a buy. And when you buy, the price collapse. Why is that and how can you avoid it? That's what we'll cover in this section. And finally, I'll share with you a support and resistance trading strategy to profit in bull and bear markets. And it works, right, whether you're trading the stock markets, the Forex markets, or even the crypto markets. Sounds good? Then smash the thumbs up button and let's get started. Now, the first thing to understand is this. Support and resistance, they are not equal. I don't care what other traders say, support is support, resistance is resistance. No, they are not equal, because in certain market condition, right, one is more powerful than the other. Let me explain. So if you look at this chart over here, this is the chart of dollar against the Japanese yen. This market is in an uptrend. So let's say, for example, if you were to draw resistance, right, this is not how I would usually draw, but just follow along with me for now. Let's say this is resistance, 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 okay? And then this is support, support, support. All right, let me ask you, in this market condition, is support stronger or resistance stronger? Let's analyze it, right, step by step. So this is over here is resistance. You see the price breaks above resistance. This over here is resistance, price breaks above resistance. This is resistance, price breaks above resistance. Now what about support, right? This is support, price didn't break below it. Support, price didn't break below it. Support, price didn't break below it. So as you can see, in an uptrend, resistance tends to get broken. And it is kind of like logical, right? Because as you know, market is in an uptrend, it means a series of higher highs and higher lows. This means resistance should get broken. So this means, right, in an uptrend, support is more powerful than resistance because it tends not to get broken. Yeah? So understand support and resistance, right, they are not equal, right? Let me give you another example. This one over here, this stock is Adobe. This market is in a downtrend. Let's say you draw resistance, resistance, resistance. Let's say this one here is resistance. And this is support, support, support. Let me ask you, is support stronger or resistance stronger in this market structure? And the answer is this. Resistance is more powerful in a downtrend, right? If you look at support, right? Support is broken, right? Price then breaks down lower, breaks support. And if you ask me, if the trend continues down lower, this area of support is likely to get broken as well. So when the market is in a downtrend, resistance is more powerful, it's stronger. So understand this concept. So now the question is, how do you actually draw support and resistance correctly? Now, you might be thinking, but Rainer, what about range markets, man? Is support stronger or resistance stronger in a range market? Great question, and I'll answer it in the later part of this training. But for now, let's talk about how do you actually draw support and resistance like a pro, right? So have a look at this chart over here. You can see that this market is in an uptrend. And as you know, right, in an uptrend, support is stronger. So this is where we want to give it more attention. So let's learn how to draw support in an uptrend. So why do we want to draw resistance in an uptrend? Because as you've seen, right, resistance tends to get broken in an uptrend. So we're not too concerned about it. Let's focus more on drawing support. Okay, and the way I'll do it is that I'll pay attention to the two most recent swing points. What do I mean by this is that this is what I call a swing point. This is what I call a swing point. This is a swing point. This is a swing point. So I'll pay attention to the two most recent swing point when the market is in an uptrend. I'll explain why shortly. And how do I draw support is like this, right? So you can use a rectangle tool or a line if you prefer, right? But for those of you who are new, I recommend drawing it as a box because support is an area on your chart. And what I would like to do is to get as many touches as possible, right, at my area of support. So for example, I'll draw it, this one possibly something like this. Okay, why do I draw this box in this manner? Because I got this one touch over here, I got the other touch over here, and this touch over here. So I got 3 touches over here. So I like to get as many touches, right, into this area of support. So another example, this one over here, I would draw this probably something like this, okay? So for this area of support, you can see, again, I draw it in this manner because I got multiple touch. I got this one over here, previous resistance, which became support, this area of support, and then this area of support as well. So this is what I mean by, drawing your support to get as many touches as possible into the box, into the zone. Now, what about this level here? And what about this level here? Why are we not drawing support at that level? Good question. And the reason why I don't draw support at those levels is because if you think about this, let's say if the market comes down lower into this low over here, let's say into this area of support. At this point, I am not interested to buy. Why? And the reason is simple. If you think about this, if you visualize the chart, if the market were to reach this point, this market is no longer in an uptrend. It's probably in a downtrend. And I'm not interested to be a buyer in a downtrend. I like to trade with the trend. Of course, for those of you who are counter trend traders, that argument might not be valid. But for me, I like to trade with the trend. And if the market reaches this low, this market is in a downtrend and I don't want to be buying, even though the price is at support. I'd rather much be selling. So this is why I don't draw, every swing level as support on my charts, because there's no point to it. Make sense? So let's have a look at one more example over here. So this market now is the inverse. It's now in a downtrend. So how do we draw our resistance, since you know that resistance is more powerful in a downtrend? So same concept applies. We like to get as many touches as possible. So this is going to be one of it here. Okay, so you can see over here. This one over here, we got quite a number of touches, right? 1, 2, 3, 4, 5, 6 touches, right? So my zone, my area of resistance will be here. The other one would probably be somewhere here. Okay, so you can see that over here for this second one, I got 1 touch, 2, and 3 over here. Now, what about this one and this one over here? Why am I not drawing this? Again, if the market were to rally up higher and retest, let's say, this highs over here, at this point, right, let me ask you, is the market in an uptrend or a downtrend? At this point, if the market gets to this price level at 34,000, the market is probably in an uptrend. I'm not interested in shorting uptrend. So this is why I don't draw every level as my resistance, because it's not relevant. Make sense? So now, next question is this. How do you trade support and resistance like a pro? So now you know how to draw support and resistance, right? How do you actually trade it like a pro? So here's an example. If you look at this chart, you can see that this is an area of support, right? And traders might be tempted to let the price come into support and then just buy over here. But for me, I don't really like to do that, because I'm sure you've experienced before. When the price comes into support, you buy, and the next thing you know, it collapses through support and goes down lower. So what I like to do instead is to actually wait for some sort of a confirmation, otherwise known as an entry trigger. And by the way, if you are enjoying this training so far, smash the thumbs up button. If not, hit subscribe. Okay, moving on. What is an entry trigger? An entry trigger is simply a specific price pattern to help you time your entry, to tell you, for example, hey Rainer, it's time to buy. So we are looking for that specific price pattern to tell us that, hey Rainer, it's time to buy. So what price patterns can we use, right? So there are a few common ones, but 2 I want to share with you today. One is called the hammer. So what is a hammer? So for those of you who do not know, a hammer simply tells you that the buyers, they are temporarily in control, because this is the opening price of the hammer. So let's say if you look at this hammer, it's on a daily time frame. Okay, this is what it's going to mean. This is where the market opened. This is where the market has closed. And this is the high of the day. And this over here is the low of the day. So the story goes something like this. So when the market opened, right, the sellers took control and pushed the price down lower near the lows of the day at the maximum pessimism, right? What happened is that the buyers, right, they were pushed to a corner, and then they found the strength, they found the courage, they found the conviction and to retaliate and push the price higher to close near the highs of the day. So this is like, for those of you who watch Marvel Endgame, right? Captain America is all alone facing Thanos' army. And you know that, that's the point of maximum pessimism. You thought, oh man, that is the end. Then what happens? Right, then that's where, I think his friend, right, Sam, right, the Birdman comes in. Then the portal starts to open. Black Panther appears. Wakanda forever! Right? And then of course, they got into a war. The good guy won the bad guys, right? So this is kind of like similar story at a point of maximum pessimism, right? The buyers to control and push the price higher to close near the highs of the day. So as you can see, this particular price pattern tells you that the buyers, they have temporarily won the war. They are in control for now. The other price pattern I want to share with you, or candlestick pattern if you want to call it, is called the shooting star pattern. So you can see this over here, again, is the opening price. This is the closing price. So one thing to note is that a hammer and a shooting star, right? The opening price and the closing price, they are opposite, right? So this is for hammer, the opening price is here, the closing price is here. Okay, so you can see that the close is above the open, whereas a shooting star, the close is below the open, right? So this is just basic candlestick knowledge. And as usual, this is the high of the day, and then this is the low of the day. So the story of a shooting star pattern goes something like this. When the market open, right, the buyers, they chiong, they quickly push up the price higher near the highs of the day at maximum optimism. Why? Celebrating, right? Victorious, right? Then suddenly, right, the sellers, right, they, maybe overdose with steroids, they got really strong and push the price lower, closing near the lows of the day, signaling you that the sellers, they are temporarily in control. So this is kind of like, at a point of happiness, maximum optimism, and your whole world suddenly come crashing down. Yeah. So this is like, you didn't study for your exam, and then you go back your exam results. You got an A, you're over the moon, right? Wow, A. And then you only realize it's actually A for absent. Your whole world come crashing down. So same for this shooting star pattern, right? So these are two very popular or useful entry trigger techniques that you can use to time your entry. And before we look at some examples, I want to walk you through a recap, right, to what you've just covered. Number one, support and resistance, they are not equal, because as you've seen, right, when the market is in an uptrend, support is more powerful, and when the market is in a downtrend, resistance is more powerful. Next, to draw support and resistance, I want you to focus on the two most recent swing points, because those are the two most relevant area on your chart, right, for buying opportunities. And finally, you can use entry trigger like, the hammer pattern or the shooting star pattern to help you better time your entry. Okay, now let's have a look at some trading examples so you can see how you can use the concepts that you've just learned, right, to trade the market. So you learn a support and resistance trading strategy that allows you to profit in bull and bear markets, right? So first thing first, remember, right, what is this market structure? You can see this market is in an uptrend, and when the market is in an uptrend, we want to be buying as much as possible at support. So let's identify our area of support, right, on this chart. So if you ask me to draw it, I'll probably have this one here, okay, and possibly another one over here. Okay, so you can see that these are the two most recent swing points, right, on the chart. Next, let's see what happens next. So what my plan now is that if this were to happen, right, I'll be looking for buying opportunities, right, at this first area of support, or possibly this second area of support. If the price comes down to here or here, it's unlikely I'm interested to look for buying opportunities. I'll probably look at some other markets instead. So let's see. So the market hits down lower, comes down into this area of support. Let's see what happens next. Now over here, we have a hammer. So if you remember, a hammer tells us that the buyers are temporarily in control as they have managed to, push the price and close near the highs of the day. So this is a valid entry trigger to go long. So let's say we go long on the next candle open. So I'm just gonna, let's say, have a line, right, to signal that we go long on this next candle open. Let me just remove this box, right, so I don't confuse you. Okay, so now this green line represents our entry price, right? Okay, so if the market opens the next day, right, this is our entry price. Now, what about our stop loss? Our stop loss is something that I've not covered yet, but generally, when I set my stop loss, I like to have it a distance below the area of support. I don't like to set it just over here because the market could possibly come down lower, hit my stop loss, and then reverse up higher. How many times have that happened to you, right? So this is why we want to set our stop loss usually a distance below the lows. And one way to go about doing it is that we can actually use the ATR indicator to help us with this. So just search ATR, pull it out. I typically go with a 20 period ATR and SMA. Okay, so what we're going to see now is that the value, the ATR value is 1.221. So how do you make use of this information? So very simple. This tells us that over the last 20 trading days, this currency pair, Swiss franc against the Japanese yen, moves an average of about 122 pips a day on average. So what we want to do is to identify the lows over here, right, and minus 1.221. So what is the lows of this candle over here? So if you realize the low of this candle, it's 137.15. So I'm going to take 137.15 minus 1.22. Okay, so if I do that, I get 137.15 minus 1.22. That gives me a value of 135.93. Pardon the handwriting. So 135.93. So that will be my stop loss level. So I'm going to highlight that on the chart so you can see it. So over here, let's change this to red to signal that that is our stop loss. 135.93. So that is my stop loss. Okay. So now just to reiterate, right, why this level is our stop loss is very simple. Because this low over here, let's say this low, let's call it X, right? We minus 1 ATR. Okay, you know the value of this low is about, at that point in time was about what did I say? Can't remember. But the low over here, right, is pretty much 137.15, right? And we minus off 1.221 as shown over here, which is one ATR value, and that gives us a stop loss of 135.93 as shown over here. Okay, so that's how we derive with our stop loss. Now, what about target? So many ways to go about setting your target, but for simplicity's sake for now, since this is the first example, we usually can set our target just before the recent swing high. So let's just change this to blue and set this as our potential target profit, right? So because this is, again, is an area of resistance, price bounce off once, come down lower, bounce off second time, come down lower. So maybe a third time it could hold up, right, and possibly reverse down from here. Who knows, right? Although this market is in an uptrend, it doesn't mean that, you know, the price will always go up forever. So this is this swing high over here could be a good reference point for us to take profit, where sellers might come in and exert some selling pressure over here. So this would be a potential level to set your target. Now, if you want to assess this from a risk to reward standpoint, you can actually use this particular tool over here. Click long positions, and you click this over here. So this one over here, you should put it at your entry point, and this one put it to your stop loss level. This one over here, put it to your take profit level. And you can see that over here, if you assess this potential trade, it's a risk to reward of 1 to 1.14. This means you're risking $1 to potentially make $1.14 for this particular trade. And just to walk you through this particular trade, right, what happens? Let's see. Eventually the market did probably would have hit our target over here on this candle, right, giving us a profit. So if just to play safe, right, let's say you know there's some slippages, you didn't get filled, eventually, this candle would have gotten you out with a profit for this particular trade. So this is an example of how you can actually use support resistance, right, to time your entry, right, and to identify, you know, trading setups in the market. Okay, moving on, right, another example, and this time around we will move to the stock markets. This is the stock of CHK, and again, same principle applies. This market is in an uptrend, so in an uptrend we want to look for buying opportunities near support. So if I were to draw support, right, what's interesting is that over here I'm seeing this is an area of support, okay, and I'm seeing another area of support just shortly, I think below here there's another one over here. So they're pretty close in this particular example, right? So let's see what happens next. So in this case, the market broke below the first area of support. Will it reverse? Let's see. Nope. Now retest our second area of support. Then now over here, we have a very strong bullish price rejection, right? So again, this is not a hammer, but this is what I would call a false break setup. Why do I say this is a false break? Because you can see the market took out these lows, over here on this candle. It broke both area of support. So at this point, right, many traders will think that the market, man, is going to collapse, going to crash. It's a bear market. But what happens next is that the market the next day reverse strongly and close back above the high. So if you think about this, the story behind this price pattern is similar to a hammer, where at a point of extreme pessimism, the buyers, you know, step into control and push the price higher, closing near the highs of the day on this candle that you see over here. So although this is not a hammer candlestick pattern, this story behind it, if you read candlestick pattern, is very similar to a hammer. So this to me is a sign of strength. Buyers are stepping in, about to push the price higher. So what I'll do is, again, I'll look to enter on the next candle open. So for now, I'm going to remove these two levels to make it clearer for you to see. So the next candle open, this is going to be my entry point over here. This will be my entry. I'll put this to green. Okay. And for stop loss, again, I will set it a distance below this extreme low over here. I'll set it 1 ATR below it. You've learned how to calculate it. I won't go through it again. So if I were to estimate where my stop loss will be, probably I'm going to guess it's going to be somewhere here. Okay, I'm not going to do the ATR calculation, right? If you want, you can refer to the previous example, which I just did. And as for target, right, I would say this highs over here, right, would be a relevant level to consider taking profits, because this is where sellers could come in. This area over here is where sellers could come in and push the price down lower. Now, one thing to add is that if you look at this chart, right, we all can agree that this is in an uptrend. And if we were to, you know, kind of like take profits over here, right, we might be leaving profits on the table, because the market could go up higher, break out higher before it reverses down on a pullback. So now the question is, how can we know where is this high that the market could reach to, so we can kind of like maximize our profits, right? How do we kind of like define how much more the market will exceed these highs, right, before it reverses or make a pullback? So in other words, right, how can we objectively identify this high over here? So what you can do, right, is to use what I call a Fibonacci extension, right? So the way to go about it is to share with you first is that, number one, you can look to take profit before this highs. Maybe if you have, let's say you bought 100 shares of CHK, you can sell 50 shares, right, at this high. So I book some profits if the price reaches that high. So let's see what happens. Okay, so in this case, you can see that the market did pull back a little bit. Still pulling back. Now seems to be going higher, higher. Pulling back a little bit over here. And eventually, you know, reach our first target over here. So at this point, we have sold 50 shares of chia PK Energy. So what about the remaining 50 shares? So again, the remaining 50 shares, right, we could sell it, right, as the price somewhere about here, right, at this point where, because if you look back at this price action of this chart, right, the market tends to break out of the highs before it makes a pullback. For example, this is the highs, the market breaks out of the highs over here, then it pulls back. This is a new extreme high, market breaks out, then makes a pullback. So the thing is that how can we kind of like predict, right, how much further the market can move in our favor to kind of maximize our profits? So this is where the Fibonacci extension, right, comes into play. So you go look for your Fibonacci extension over here, select this one, trend-based Fib extension, and you draw it, right, for this particular example, it's from this low to this high and back down again. Okay, so if you look at the chart, right, you can see that we have a few levels popping up. We have the 127 extension over here. We have the 162 extension and the 2.0. So again, to be conservative, right, you can look to take your remaining shares of this stock, right, CHK, at this 127 extension. So you can set your second target, right, at around this level over here. So let's see what happens next. So in this case, the market eventually pull back a little bit and eventually reaches our second target over here. So this way you have 50 shares of this particular stock, right, chia PK Energy, exiting at this swing high, and the remaining 50 shares at this 127 extension. So this is how you can kind of like, you know, get the most bang for your buck, right, where you have certain number of shares, you know, to take at a second target profit objective. Okay, pay attention. So if you recall, right, earlier I said that what about range markets, right, support stronger or resistance stronger? So I want to tackle that in this section over here. So if you look at this chart over here, this is the chart of Canadian against the Japanese yen, the 4-hour time frame. You can see that this market is pretty much in a range. Okay, so the question is, man, Rainer, is support stronger or resistance stronger in this example? So the thing to find out is, you know, here's the tip for you, is that you want to refer to the higher time frame and see what the market is doing. Right? So if you know that the higher time frame is in an uptrend, then in this case, in this range market condition, I want to be as much as possible buying at support. And if the higher time frame is in a downtrend, then as much as possible, I want to be selling at resistance. So this is how we gain an additional insight, right, to see what the higher time frame is doing, to then determine, right, whether in this range market condition should we be looking to buy at support or sell at resistance. So as you can see, this is the 4-hour time frame. Let's go up to the daily time frame and see what this market is doing. So on the daily time frame, you can see that this market is actually in an uptrend. So if you know the market is in an uptrend, then guess what? You want to look for buying opportunities at support. So this is where you can again go back to your 4-hour time frame, right? And you have identified that this over here is a range. Okay, it's a range over here. You can then look for buying opportunities at this area of support. So again, you can use, you know, your entry trigger, your candlestick patterns that you are familiar with. So let's see what happens next. So in this case, the market come down into support. Seems to break below support. But as you know, right, when the price breaks below support, sometimes it could just quickly, you know, just reverse up higher. So let's see. So in this case, it starts to stall. Close lower for the day, slightly lower. Then over here, with a strong bullish reversal pattern. This is what we call a bullish engulfing pattern again, right? This pretty much means that the buyers, right, they are temporarily in control as they have managed to, you know, push the recent down move over here, right, as the sellers are trying to push the price lower. In one candle, right, the buyers stepped in, right, reverse all the losses and close near the highs of this 4-hour candle. So again, this, right, could be a valid entry trigger to go long, right? So let's say you enter on the next candle open. Okay, let's say I will draw over here. This is the opening price. I mean your entry. I'll just change this to green to signal your entry. I'll remove this box so as you already know, it's an area of support. For stop loss, again, usually a distance below this low, let's say somewhere here over here. So as you know, right, you can use the ATR indicator to help you determine your stop loss, but I'm not going to calculate it since I think you should be familiar by now. Now, what about target, right? So if you look at this chart, this is a range market, right? There are numerous areas on the chart, right, where you can look to take profit. I think this is one over here, this swing high, and possibly another one over here. Okay, so let's walk through and see what happens next for this market. So as you can see, the market starts to head higher. Okay, I'll just play this a little bit faster. So let's say, for example, our first target, let's say we put it over here. This is our first target. I'll just change this to blue. Let's say this is our first target. Okay, let's see what happens. You can see that the market now starts to reverse back to our entry point. So at this point, right, many traders, they would get panic. Right now, market is reversing. Let me exit the trade now before, you know, this trade turns into a loser. But you have to understand that the market doesn't usually go up in one straight line. If you look at this chart, right, the market goes up, makes a pullback, goes up, makes a pullback, goes up, makes a pullback, goes up. It is not surprising to see that, you know, before the market, let's say, reaches your target over here, it's going to go up, makes a pullback, goes up, makes a pullback, goes up, makes a pullback, then goes up, reach your target. So again, you don't expect the market to, I mean, sometimes it could, you know, immediately reach your target, and of course, right, that's easy trade, easy to hold, great. But there are many other times where the market goes up, pulls back, goes up, makes a pullback, and, you know, toils with your feelings. So you have to be prepared for that. So in this case, this is one example of how the market, you know, seemingly, you know, seems to be moving in your favor, and then suddenly makes a pullback back to your entry point, and now you get freaked out. So a lot of traders will just exit this trade for break even, and whew, relief, right? Oh, then this trade didn't turn into a loss. But if you look at it, right, you know, that isn't really respecting the market price structure, because you know that market doesn't really go in one straight line, goes up, makes a pullback, etc. So let's say you are a mature trader, you didn't, you know, just quickly exit your trade. All right, so let's see what happens next. So you can see the market then starts to retest these highs. Okay, so at this point, okay, I would say it is not wrong if you look to exit a portion of your trade at this highs. Why is that? Because you now know that when the market heads down lower and then it retests back this highs, right, this could be an area of resistance where sellers could come in and push the price lower. So this is a swing high. So if you, let's say you long one lot of Canadian yen, you can sell 0.5 lot, right, at this high over here. I think that's a decent move to take, okay? And then you can have the remaining 0.5 lot, maybe have it at this level over here, or if you want to be more aggressive, you can even shift it to this highs over here. Okay, so let's say we just leave it at this level over here and see what happens next. Okay, so in this case, the market, we have exited half our position at this highs. Let's see what happens. So once you exit half a position, right, you're going to be psychologically easier on you, because let's say if the market does reverse back lower, right, and hit your stop loss, right, it's not going to be a loss for you because you already booked some profits at this highs over here. And if the market hits your stop loss on the second half of your position, you probably end up break even on this trade. So psychologically, it's going to be easier to hold, right, once you exit a portion of your position. So in this case, the market, as you can see, again, it collapsed down lower back near to your entry point. But again, you wouldn't be too shaken out. In fact, you feel a bit relieved, right, because you've already exit a partial profits, right, at this recent highs over here. Okay, so let's see what happens next. So you can see that the market starts to, you know, flirt with your emotions, goes in your favor now. Then it starts to collapse back lower, now below your entry point price, right? So at this point, you know, you're prepared to get stopped out. If you do, you probably end up with the overall break-even trade. So let's see what happens. So in this case, the market then respect this area of support, starts to show signs of reversal back up again. And play this a little bit faster. Eventually reaches your target over here. So at this point, you can see, right, the trading is simple but not easy, because at this price point, right, many traders will think, oh man, this market is consolidating. What if it breaks down lower, right? That could happen. So again, this is up to you to kind of like to actively manage your trade, right? If you think that, man, if the price reaches back above this highs, I want to exit, you know, the remaining half of my position, I won't say it's wrong, because you're kind of like respecting the current price structure and then managing your trades accordingly. But again, if you are the type of trader that, you know, is very disciplined, I already, you know, book some profits on the first half of the position, I want to ride the second half to my second target over here, again, that is fine as well. So you've got to journal out your trades, right, and to find out, you know, what works best for you. So hopefully in this example, I know it's a little bit detailed, I want to walk you through actually in this example to show you the different type of active trade management strategies, right, that you can take to trade the markets, because trading, it is simple but not easy. Yeah, yoo-hoo! Right, so now pay attention, right, because what I'm about to share with you, right, is advanced stuff that I believe 99% of traders, right, don't even, you know about it, right? So we are going to deal with multiple time frame now. So if you don't really understand what I've covered so far, then, you know, review back this section, because we are going to use what we have learned so far and take things a step further. How do you actually fine tune your entry, right, to risk a dollar to make, you know, $3, $4, or even $5 or more? So thereby, you know, can see improving the risk to reward on your trade. So first thing first, right, again, we are going to go down to the weekly time frame. In this case, right, we are going to use multiple time frames to help us time our entry, but again, we are using the same principles that you've learned earlier. This market is in a downtrend, right? So in the downtrend, you know that you want to identify your area of resistance. So the recent area of resistance that I'm seeing is possibly this one over here. Okay, why this one? Because if you look at this, right, this is where previous support, price break below support, which could now become resistance. Okay, so let's see what happens next. So this is the area of resistance that I've highlighted. So what I want to do is to let the market come in towards this area of resistance. Okay, so now it's inside over here. Then I want to go down to a lower time frame to help me fine tune my entry. So instead of, you know, what most traders will do is that they let the price comes into resistance, then maybe give them a shooting star pattern over here, right? Then it goes short, stop loss above this highs, target maybe at this low. So you can see that if you were to do that, at best you get is 1-to-1 risk reward ratio. But how can you use this same analysis, right? And instead of getting a 1-to-1 risk reward ratio, you get maybe a 1-to-3, a 1-to-5 risk reward ratio. Here's how, here's the magic. Okay, so what you want to do is to go down to a lower time frame like the 8-hour time frame. Okay, so now at the 8-hour time frame, this is what you're seeing. And on the 8-hour time frame, you can see that this market is approaching this area of resistance over here. Okay, so what you're looking for is for possibly getting a bearish price rejection to help you time your entry. So let's see what happens next. So in this case, market heads down lower. Okay, so what we're looking for is to see if the market can head up higher and then get rejected, close back below this area of resistance. Because when that happens, right, we can then use this as an entry trigger to go long, right, and taking cues, right, from the weekly time frame bearish, direction. Okay, so let's see what happens. So in this case, you can see that the market, yep, there we have it, right? Notice this candle over here. It's small, but still, it's a bearish price rejection. The price tried to break out higher of this highs. This candle tried to break out higher, only to close near the lows of this 8-hour time frame. So this is a entry trigger to go short. So what you can do is, again, let's say you go short on next candle open, right? Let's say the next candle open is over here. You go short. Let's just change this to green color to signal as our entry. I'll remove this box resistance because you already know what it is. Then let's say our stop loss, right, is a distance above this high. Let's say 180 or above it. So let's say change this to red. This is our stop loss. Okay. And what about target? So here's the thing, right? As you've seen, right, sometimes trade management is not the easiest thing. As in our previous example, the market can move in your favor, go against you, moves in your favor, go against you, right? And then if it does hit your stop loss, you go, you get crazy, right? You want to kill yourself and jump down the building, but please don't do that, right? So you can see that trade management, right, is critical, right? And the market sometimes doesn't just move in one straight line and reach your target profit. It can mess with your emotions, make you go crazy, make you go, right? So what you want to do is that I suggest is for new traders is to have two parts. With regards to your take profit, you can have a TP level 1 and a TP level 2. TP stands for take profit. So to make your life, or to make your emotions easier to manage, you can have a first target over here, right? Just before this recent swing low as your first target. Okay, so I'm just going to change this to blue as your first target. So let's say, for example, in this case, it's New Zealand dollar. Okay, let's say you're short one lot of New Zealand dollar. You can set this first target, right? TP1, right? And, exit 0.5 lot at TP1 over here at this blue level. Okay, let's see what happens next. So in this case, market is kind to us, pretty much reach our first target relatively quickly. So at this price point, if the market, let's say it were to reverse and hit our stop loss, this trade will probably be just a break-even trade because the first half of your position has already, booked a profit. So now, at this point, right, let me just bring you back to the weekly time frame and see where you are. So if you look at the weekly time frame, right, this is the green level is where you actually shorted the market. So you actually short, right, at the upper wick of the weekly candle. And that's really the secret, right, to entering at the wick of a candle, right? You got to use multiple time frames to help you better time your entry. And I'm pretty sure that 99% of traders, right, do not know that this particular technique exists. So if you think this is awesome, smash the thumbs up button. If not, hit subscribe, yeah? So carrying on, right, you can see that this, on the weekly time frame, the market is in a downtrend, a series of lower highs, lower lows, lower lows, lower lows. And the market tends to, break below the swing low. So again, over here, this low, market break below the swing low. This low, market break below the swing low. So if you ask me, the market has a good chance it could break below this swing low, right? And could, give us a favorable risk to reward on the trade. So how can we maximize our profits, right, in this instance? So again, one way to go about is that you can use the Fibonacci extension technique I shared with you earlier. You can, use the 127 extension and project where the 127 extension might be over here, and then use that as your second target profit. Alternatively, right, you can also, trail your stop loss and to ride the trend down lower and to, see how much further the market can go. And this is something that I want to talk about since I've not, discussed it yet. So on the 8-hour time frame, what you can do is, again, okay, so you need to have a second target, right, where you expect the market to move. So once it reaches your second target, right, and then you can, throw in a trailing stop loss to ride the move down lower. So let's say, for example, we see that this is an extreme low over here, and you expect the market to retest these lows over here, right? So let's say we want to see if the market will retest these lows first or hit our stop loss first. So let's see what happens. Okay, so let's go. So in this case, the market pretty much reach the lows over here. But remember, if we want to trail our stop loss, right, we cannot exit the trade at this lows over here, because if you were to exit, then there's no more trend to ride. So what you can do is at this point is, again, you can add in a moving average, like, a 50 period moving average, a 20 period moving average, depending on the type of trend that you want to ride. So let's say we go with a 50 period moving average, right, which is this blue line over here. So you can see that what happens is that for this trailing stop loss, right, you'll tell yourself, if the market goes up higher and closes above the 50 period moving average, only then will you exit the trade. If not, you will continue holding this trade, right, and see how much further the trend can move in your favor. So let's see what happens next. So in this case, you can see that the market have a slight brief rally, and the 50 period moving average is coming down lower as well. So over here, you can see the market right, broke down below these lows, nice, but again, you're not exiting your trade yet because you're trailing using the 50 period moving average over here. So you only exit the trade if the price breaks and close above the 50 period moving average. So in this case, you can see that over here, still heading down lower, nice. And then almost at the 50 period moving average, but has not closed above it yet. So we are still holding this short position. You can see that's quite a long wait. And finally, the market has break and closed above the 50 period moving average. So at this point, you exit the second half of your position on New Zealand dollar. So you can see that for this particular trade, right, you exit first half at this blue line over here, your first target, and your second one you exited at this portion over here. So you look at, if you assess it right from a risk to reward standpoint, you're possibly risking $1 to make, you know, $3 or more. Yeah. Okay, one last example before I go. Right, boom shakalaka, boom shakalaka. Boom, right? So I'm really feeling it, right, as I produce this this content here today, because, you know, it feels like, you know, man, this just feels really good. It feels really awesome, because this is, I would say, is the best of the best that I can give out, right? So anyway, moving on, right? So let's have a look at this chart. This chart is the 4-hour time frame, Canadian yen, and it seems like the market is in a range. And as you know, right, if the market is in range, do you buy at support or sell at resistance? The clue is the higher time frame. So if you look at the higher time frame, the daily time frame, Swiss franc against the Japanese yen is in a uptrend. So as much as possible, I want to be buying at support. So on the 4-hour time frame, okay, this might seem like a range market, but you know that support is likely to be more powerful. So let me buy, or rather look for trading opportunities at support. So I'll draw this area of support over here. Okay, so let's see what happens next. Market come into this area of support, and then we have a strong bullish reversal pattern, right? So this isn't a hammer, but if you look at the price action, you can see that the story is very similar to a hammer, right? This candle is a down candle closing near the lows. This candle is a down candle, right, closing not near the lows, but in the middle of the highs and lows of the candles range. And then this next candle, buyers stepped in and pushed the price higher, closing near the highs of this time period, which is the 4-hour time frame. So again, right, this to me is a valid entry trigger, because this is what I call a false break, where the price tried to break below these lows, break below these lows, break below these lows, right? You can see over here, only to reverse up higher, right? Telling me that, you know, there isn't any more selling pressure. That's why the price have difficulty breaking down lower. So what I'll do is that I will look to enter on next candle open. Okay, so somewhere over here, I'll change this to green color as my entry. And by the way, this is actually a live trade that I took on my own trading account. So I'm walking through the same process, right, that I had when I took this trade. I'll remove this support area first to make it less cluttered, right? My stop loss was somewhere about here, 1 ATR below this low. So somewhere about here is my stop loss. I'll just change this to red, okay? And as for target, right, at that point in time, right, my target was actually at this recent swing high over here. This most extreme high, right? So that's my first target. So I had two targets in mind. Reason being is that if you look at the daily time frame, you know that this market is pretty much in an uptrend. Okay, it's in an uptrend. So I want to have my first target over here. And my second target is that if the market breaks above this highs and continue higher, I want to trail my stop loss, right, and to ride the uptrend up higher. So that's the way I was planning this particular trade. So let's see what happens next. On the 4-hour time frame was my entry, and you can see that the market reversed against me, next candle, and then immediately, right, or relatively quickly hit my stop loss, and then close back up higher. So this is actually a losing trade for me. And as you can see, what happened next is that the market, it did eventually, you know, continue higher, but I was already stopped out of the trade. So the reason why I'm sharing this with you is that whatever I'm sharing with you here today is not the holy grail. It's not foolproof. You will have losses along the way. Plenty of losses, in fact. So my hope is that you can take the strategies or concepts that I've shared with you and do your own validation, do your own testing to make it, to mold it, to fit your own trading, right? Regardless of what markets you're trading, what time frames you're trading, to, you know, use these concepts, right, and to develop it and tweak it for your own. Okay, so that's kind of my hope over here, and also to let you be aware that, you know, there's no 100% winning rate. There will be winners, there will be losers along the way. And before I go, if you want to learn more about trading, support, resistance, price action trading, you can get a copy of this book called Price Action Trading Secrets, right? We dive deep into candlestick patterns, support, resistance, trading breakouts, pullback, etc. I'll put the link somewhere below this video so you can get a copy of it. And with that said, I wish you good luck, good trading, stay safe. Talk to you soon.
Hi everyone, I welcome you all to the live session on Data Analytics Full Course by IntelliPat. This session is conducted by multiple experts who will be teaching you all about data analytics from basics to advanced level. But before we begin the session, make sure to hit the subscribe button and also hit on the bell icon so that you will never miss an update from us. Now let's see the agenda. Firstly, we will begin with Introduction to Data Analysis. In that, we will be explaining you what is data analysis, why do we require that, and types of data analysis. Once we finish that, we will explain you about the life cycle of data analysis. Then later on, we will tell you how to become data analyst, what are the skills required, job and career prospects of data analyst. Post that, we will learn about pandas and data analysis using pandas. Then later on, we will learn about exploratory data analysis and also NumPy. Then later on, we will be doing a very quick hands-on demo on how to create NumPy array. After that, we will be seeing the difference between a data analyst and data scientist. Then finally, we will be covering data analyst interview questions and answers. So, this is the agenda of the video. Without any further delay, let's get started.
We've all heard this term somewhere. It pretty much rings a bell that every time we think about it, right? So analytics with respect to data. Well, what are we trying to analyze is what we need to know here, right? So the formal definition of how it goes, it's basically extracting meaningful information from raw data. It's as simple as that. So we have data, right? So consider anything to be data. If that is not useful to you at that point, it is considered as data. But then if you perform some operation on this data and make sure that it is useful for your organization, this is when the data becomes information. And this information is what is usable for you, right? So the process of pretty much converting raw data into information by performing certain analysis on it can be termed as data analytics, guys. I mean, this is just a very rough definition of what goes in the industry. To give you a better insight of what that means, basically it is the pursuit of extracting meaning from raw data using specialized computer systems, guys. And then these systems, they transform, they organize, and they model the data. End of it is to basically draw the conclusions from all of the data. So you'll have, again, as I've mentioned with the raw example, our goal here is to basically draw conclusions, to identify patterns, to make use of this raw information in a better way. I mean, sure, data can just be used in its raw form, but then not with every case, right? And to give you an example, so think of the data probably you understand. So let's say you're looking at a huge data set which contains thousands of values. Those are just numbers, right? So having these numbers, sure, as a data analyst, you will understand what you're doing. But then let's say you need to explain it to a person who doesn't know what data analytics is, or you need to explain it to someone, probably your peer or someone above you as well. Let's say you have a business meeting where you have to explain this. Giving the numbers will not really be that great, right? It will not make a very good presentation. So converting all of these numerical data, making it into graphs, making it in a way where everyone understands the data, and then showing out graphically whatever insights that you can generate from the data, that can be considered as data analytics as well, guys. Again, today basically the field of data analytics is ever so growing rapidly. And why is it growing so rapidly? Well, because the market demand for it is that much. So we have pretty much every startup companies these days have a requirement for big data as well. So big data, to dumb down the definition, it pretty much means a huge amount of data that cannot be handled by just one machine. If you're stretching out your data across multiple nodes, you have data coming in from various sources. Then you need a method to handle all of this big data that's coming in, to process the data and then to perform analysis on it, guys. So this has been in demand in the market for a while, and for the last couple of years, data analytics has been in the boom, and then it's providing a very straight answer to all of the questions being raised about how all these can be handled, guys. And of course, we're going to need the people who have the skills which is needed, skills which are needed to manipulate all the data queries, to translate all these numbers into graphs, and to make insightful analysis on it, right? So that's what is the main key role of a data analytic person. What is the need for data analytics if we have to break it down into 3 steps, guys? So again, we already know that it is on the rise, right? So I can pretty much go about to step out into the open and then tell you that it is not soon that it will be an integral part of an organization. It is already an integral part of every organization there is, guys. So the first important need is, again, we already know that it is a top priority for all of these organizations, ranging from the small organizations all the way to the big guys. And then this is needed to make very good decision making. Well, with respect to you being confused to, let's say, take a decision for you, then looking at this analytics will make your decision making skills and decision taking skills a little bit easier, and it'll be more validable as well, guys. And it'll be more validated as well, guys. And the second thing is to we require new revenue, right? So let's say you have the data which pretty much only a couple of people can make sense of understand. Let's say your market is very niche. In that case, sure, you'll be still making revenue, still be making money on it. But then at the end of the day, if you have to reach out to a broader audience, you need to make sure your data is understood by this broader audience, right? So that forms the second very important need for data analytics, guys. And the third one is to obviously decrease these operation costs for every organization. So this can be a very demanding task if you have to convert raw data into information, process the data, and make out very good visualizations out of it as well. But then if you have the workforce for it, then sure, you can do it. But if not, again, since it's probably a manual task, and until a couple of years ago, it surely was a manual task. And these days you can implement machine learning and data analytics to pretty much automate itself and make your job easier as well. It speeds up your work. It keeps you very efficient in such a way where your data is being visualized, processed very effectively. So again, time is money when it comes to big organizations, right? So on that note, pretty much it helps decrease all of the operational costs with respect to, either waiting in the data pipeline, or waiting to process, waiting to publish, waiting to do some analytics, waiting for visualization. All of these waits, you need not consider them anymore because they will pretty much be reduced to null, guys. So on that note, you might be wondering, who are data analysts, right? So data analysts are the people who sit at the end of the chain. I'll just explain the chain in the next slide. So these guys form a very good workforce for the company, where they basically deliver the values by taking in all the data that data scientist might give it to them, a data engineer might give it to them, and then he uses this person, data analyst, uses all of these to answer a couple of questions and then communicate all of the results back. And all these results that he just gives back is basically used to take very good business decisions, guys. It might include analytics of past trends, it may be prediction of what the future looks like, and so much more. And then the common tasks done by data analysts are data cleaning, performing analytics, and then creating visualizations. Well, data cleaning, to come about it, is basically simple, guys. So again, data is raw information, right? To make sense out of it, to pick out information that we only require, and to make sure that, again, efficiency is the game here. If you're pretty much processing data that we pretty much will not require, then it's just a waste of time and resource. So cleaning the data, making sure that your data is just perfect enough for processing, that's a very important first step, guys. So this is the spearhead of a data analyst's role. And then the second one is, obviously, as soon as your data is clean, you need to perform some very good analytics on it and create very good visualizations, guys. So these four designations you see on the screen right now is basically the designations a data analyst is also known by. So the first is a business analyst. So data analyst is also a business analyst. He or she can be an operations analyst, a business intelligence analyst, and a database analyst as well, guys. So coming to the tasks that they pretty much do, the first important task that we already spoke about was cleaning and organizing raw unstructured data, right? So this is again a very overlooked concept in today's world, unless you get your hands dirty with the data itself. When you start to go about doing that, you will realize that cleaning and organizing the raw data is extremely important, because at the end of it, your data might be unstructured, your data might be semi-structured, or it might be a structured data. This will not matter if the data you're processing is of no use at the end, guys. So cleaning and organizing raw data is very important. And then the second thing is the analysis of all of the hidden trends found in the data. So making sense of something, again, maybe predictions in the future, looking at past trends, generating this sort of an information which you cannot figure out upfront just by looking at the data. This is pretty much the umbrella under which the hidden trends function of a data analyst's work. So you'll be looking at a data, you'll find something very interesting. So let's say you find a trend in your data where pretty much you can access a new side of the market with respect to your sales in the next 5 years, 10 years. And then you were not told this, but then your data was telling you this. So you making sense of the data in which this trend was found, which was not upfront, then this is again a very important skill of a data analyst as well, guys. And the third important thing is pretty much the big picture view using descriptive statistics. At the end of it, sure, we know what the past trends of the company are, we know how the company is going on now, but then if you need to just summarize all of this and say even add some predictions for the next 5-10 years, getting this big picture view of what's happened, what's happening now, and what will happen in the future. Not just using very simple statistics, but using descriptive statistics where we'll be picking up each aspect of what's going on and then perform analytics on it and find out what's going on. If we are right at this place, if we are wrong at this place, how can this be improved? How can this concept be checked? How can we reach the clients better, and so much more. So getting this big picture view is again a very important task a data analyst goes about doing, guys. And the fourth one is probably the most important thing a data analyst does, is pretty much the creation of dashboards and visualizations, guys. So as I already told you in the introduction part of the video, where we're starting out with raw information, again a lot of numbers, but if you have to show these numbers at a business meeting, yeah, I mean, numbers are numbers. Some people like them, but a majority of the people who they might not understand the numbers. So making these numbers as your input, creating very good visualizations, giving them a user interface, and giving your customers, your peers, your superiors, your business meeting members, giving them a very good user experience with all of this data. Again, at the end of it will add up to very good business methodologies, and then it will help you take better business driven decisions again. And again, the same goes for presentations of results to your clients and your internals as well, guys. So coming to the chain of how the data moves around in a firm, I have 3 important things that I just want to walk you through, guys, in a quick gist. So the first person who is the spearhead of the data for an organization. By spearhead, I mean he's the first one who look at the data, or he'll be responsible for bringing in all of the data from various sources, guys. So data coming in from the various sources, right? So think about all the data you can get from Twitter, or if you're performing any sentiment analysis, think of all the data that can come from all of the big data sources. You can have data coming from your various nodes from Hadoop, so much more. You can have your data coming from your own network, away from your network, and so much more, guys. So the data engineer is a spearhead who handles bringing in the data and making it understandable by the organization, guys. And then as soon as the data engineer finishes his part with the data moves on to the data scientist. The data scientist, he's responsible for working on all of these raw data, converting it into valid information. But then we already told this for the data analyst as well. Well, the data scientist pretty much uses machine learning algorithms. He uses deep learning. He uses, let's say, binary classifications, naive bias. He makes use of so many concepts here that a data analyst might not know. And he uses a lot of machine learning and deep learning, as I've already mentioned, to convert this raw data into valid information. And 99% of the time, the information which is being converted into are numbers, guys. So after the data scientist pretty much goes about doing his magic onto the data, and then we have the data analyst who steps in. This person, again, as we've already been mentioning, he is responsible for the prediction of what happens in the future, that is finding out trends, and then the presentation of all these informations to your peers, to your clients, to your superiors, and so much more. This is the basic gist of how data moves around. So the data is first seen by the data engineer. He does his job, comes to the data scientist works his magic via all these fancy algorithms and whatnot, and then pushes the data to the data analyst performs predictions, sees trends, visualizes the data, makes it presentable for everyone to understand, and then eventually goes about analyzing the data, guys. So on that note, we can come check out the type of data analytics that can be done in today's business, guys. There are a couple of types of data analytics, and I'll be walking you through the same. So the first type of data analytics you can go about doing is the descriptive analytics. With respect to descriptive analytics, again, the quick one phrase answer to what descriptive analytics is basically picking out data from a source, summarizing your data, making sure your data can be understood by everyone, that is picking out very good insights from your data, from all the past events, doing some predictive analytics on that as well, and then keeping it ready so your data is descriptive at the end of the day. And a question which goes by to understand the descriptive analytics is what happened in my business. So the answer to this question, what happened in my business, is given to by the descriptive analytics, guys. So most of the time the data which is generated by descriptive analytics is very comprehensive, it is extremely accurate, and the visualizations are very effective as well. So here's a very simple scenario that you guys can consider. So consider a scenario where an e-learning website decides to focus on a trending course according to the analytics of the search volume of the course content, which pretty much the users go on searching, and all of the revenue generated by the course in the past few months as well. So there are certain technologies, again, we live in a world full of trends, right? So let's say data science is in the boom right now. So pretty much any e-learning company, or any company for that matter, they're going to find these trends. They're going to know that, hey, data science is sitting in the top tier and we need to do something about it. If they have students in data science, then most of these companies are aimed at making the student's life better, right? So even as a firm here in IntelliPath, that's exactly what we do as well. We get this amazing insight from all of our learners for any particular course, and we use all of those insights, all of the feedback that we get, and what's trending in the market, what's latest in the market, and we use all of these to perform analytics, and then pretty much all of these helps us to put out a better course as well, guys. So at the end of it, you can already see how the descriptive analysis is already helping our business, right? And then the next type of data analytics we can check out is the diagnostic analytics, guys. So we already checked out what is happening to my business with respect to descriptive analytics. With respect to diagnostic analytics, you will check out of why this particular thing is happening to my business, guys. To simplify it again, it basically gives you the ability to drill down to the root cause of why something is behaving just like how it should, guys. So drilling down the data to identify certain set of problems which are present in your data or in the trends that the data shows is a very vital part of diagnostic analytics, guys. And then it basically helps in answering the question for us about why the issue has occurred, So it just takes one look towards the data, towards the analytic result of the data, to understand what the cause behind a problem, if one should exist, as, guys. So again, to give you a very simple scenario of how diagnostic analytics would work, let's say consider a company where the sales went down for a month. So let's say they weren't doing as good as the previous months. So to diagnose this particular problem, you will let's say consider the situation where the number of employees were quitting their job and they weren't bringing in a lot of sales. So this could pretty much, this number of people quitting the company could directly impact the sales that they brought into the company. So the sales went down this month because they did not have the company right. They did not have the sales right. So finding out why this is happening and hunting for that root cause, which is basically a treasure hunt with your data, where you go on finding something and taking insights from your data. Finding out that why part of it is extremely important, where you'll be finding out what's happening to the data and why it's behaving this way, guys. So this again is a very vital part of diagnostic analytics. And coming to the third type of data analytics, it is predictive data analytics, guys. And as the name suggests, the quick question you'll be asking is what will happen in the future based on the past trends, guys. So finding out, hunting out, historical patterns that are being used to basically predict all these specific outcomes using let's say machine learning algorithms, using deep learning, and using so many more concepts to predict something in the future based on the data we have now is again a very important niche of data analytics, guys. So predicting the future trends and the possibilities in the market based on the current trends, self-explanatory. And then it helps in optimizing all of the business plans for the future, because now your business has a direction to head to, right? So you're predicting certain aspects in the future and you know which path leads to better business strategies, right? And this will give you an edge over all of the other businesses as well. To give you a very nice example, think of the Netflix recommendation systems, guys. So this will basically use statistical modeling to analyze all the content that it's being watched by the audience across the world. So let's say there are a couple of TV shows which are very famous in India, but then there might be a couple of TV shows which is trending in the United States, and let's say Australia, United Kingdom, so much more. Making sure that the right users in the right geographical area get to know the right recommendations are extremely important for Netflix as a business, right? So this again, predictive analytics will just do them good there, guys. Again, it will provide us with the prediction of all of the upcoming content and the shows that must be watched by all the different class of audience as well. So let's say someone sitting in the United States is very interested in watching an Indian trending television series as well. So knowing Netflix, finding out that this person exists and to recommend an Indian TV show for this person sitting in the United States to watch. Again, this is another very good business opportunity for Netflix. And then if they go about nailing their recommendation system for everyone, it just makes them a better business model, and then it just makes a better user environment for the users to go about watching videos there, guys. So the next type of data analytics is prescriptive data analytics. So as soon as we think of a prescription, again, we think of a doctor, we think of something, a medical appointment or something, right? Here it's again something similar. The question which will be asked here is what should be done? So applying advanced analytical algorithms to ensure that you make very good recommendations, you make sure you're punching out very good strategies that help the business, and so much more is a very vital part of prescriptive analytics, guys. So it basically involves breaking down all of this complex information into a very simple set of steps. And these steps are like the prescription we handed out when we visit the doctor, right? And these are the prescriptions which are precautious as well, let's say. They're the precautions basically used to remove any of the future problems that might occur, and it will also help in performing predictive analysis. This will basically help to predict outcome, and eventually that will help us optimizing business as well, guys. So this again demands the use of artificial intelligence and big data, and then the data analyst person will always be in touch with the data engineer as well and the data scientist as well, because he's going to need all the help he can get with respect to artificial intelligence from the data scientist, and help with respect to big data from the data engineer as well, right? So all these three guys working in correlation make up a business, and I've already told you that. So again, to give you a common scenario of how this would happen, consider the prescriptive data analytics that Google Map goes about doing, right? So every day we are commuting from our office to our homes, or let's say we're going on a vacation and then we need to get out of the city as quick as possible. So Google Maps has a wonderful API where they map out the best possible route considering live traffic conditions, weather conditions, road closures, and so much more. It considers your distance, traffic constraints, and again, as I already told you, it even considers if it's raining, if you're walking, what's the best route that you can take to walk, what's the best route to take if you're on a car. And now they've come up with the bike route as well. So if you're in a moped or a bike, you can take a different route compared to the person who'd commute with the car, and so much more. So knowing this kind of a prediction into the future, and giving you this sort of a prescription to ensure you don't run into any problems along the way is a very important part of prescriptive data analytics, guys. So on that note, let's quickly check out what the life cycle of data analytics is like. So the data analytics lifestyle, it basically defines the analytics process and all of the best practices which goes on from the discovery of the data or the project till the completion of this project, guys. So there are a couple of steps involved in this life cycle process, and the first one is business understanding. At the end of it, again, understanding the purpose and all of the requirements that come from your business, and understanding it from the business viewpoint is very important and vital for the functioning of a business, right? This also consists of a very good introductory plan. It consists of a decision plan. It consists of a formal to-do list, let's say, for the business to go on to achieving the target. So the first important thing about the life cycle is the understanding of what's going on around you, and the second one is the data understanding, guys. With respect to data understanding, again, this mainly involves the process where we're collecting the data and we're processing the data in a way which leads to analytics. And then after the analysis of the data is done, we need to pick up some insights that we can go about using from the data. So extracting all of these meaningful insights from the data, again, is a very vital step in the life cycle of data analytics through data understanding, guys. The third part of it is data preparation. So data preparation is the let's say, converting the data from an unstructured form to a structured form, and this involves constructing, let's say, a data set as well. And then this data set will be provided and fed into a model, and then this model will be used by a machine learning algorithm to train, to understand, to see what's going on, to perform predictions, and then it will be given to the data analyst to be visualized using Tableau or any other business intelligence tools, and so much more. So data preparation, again, is a very important phase where the data is actually being transformed, and even at the stage, the cleansing of the data is pretty much performed as well, guys. And then comes modeling. This step is very important because it involves the selection of various modeling techniques, applying all of these modeling techniques, making sure the parameters are right and all of the readings here are right to ensure that your data being converted into the information, raw data being converted into the information is of the optimal, let's say, it's of the optimal tolerance that can be used for your business usage. And then as soon as your modeling part of it is done, as soon as the techniques are applied and all the parameters are marked, then comes evaluation, guys. So evaluation is a very important phase where, again, the model which is being built, it will be built very rigorously, tested very rigorously based on what you've built in the initial stages, and then so many tests will be performed on this data as well. So evaluating something that you have generated, performing various tests on it, is extremely important. Most of the time this is overlooked, but then these days everyone knows the value of evaluating your data, guys. So this again involves reviewing all of the steps that are again needed to carry out to construct this particular model and to perform tests on it is very important. And with evaluation, that's exactly what we do, guys. So the next life cycle concept I want to tell you guys is deployment. Deployment is the last step in the data analytics life cycle, because deploying is when you're sending out your model into the world for, let's say, by the world I mean, let's say, for your team, for your peers, or let's say even for your client and customers as well. So making your data go from just you seeing it all the way till spreading the data and spreading the data to your clients, to your peers, or anyone else. If you can perform more tests on these as well. So after deployment, you can have after deployment tests. If something is wrong, again, you can go back to modeling, perform more evaluation, perform more deployment as well. So the thing you need to know here is that deployment pretty much goes about to be the final phase of the data analytics lifestyle, guys. And on that note, we can check out very quickly what are the roles of analytics in various industries around us, guys. Again, data analytics has an amazing insight and impact when it comes to the telecom industry, because again, if you've been observing, all the prices of or let's say the calls, the messages, or the internet packs these days have been coming down and down. And there was a time when they were being exorbitantly high as well. So again, the telecom industry realized that if you keep the prices very high to make more profits, then eventually your customers will not come. They will not buy the internet packs. So to keep this in mind, probably they decided, let's say we're having a bad impact right now, so let's drop down our prices to see if it works. And it is, I guess. And this has helped the telecom industry in bringing better business. And for us as users, this has helped us just make it a bit economical and efficient on our side with respect to money as well. And then the retail banking industry, data analytics has a huge impact in the retail banking industry as well, to know what their customer wants. Because again, with telecom industry as well, they have a huge amount of customers to play with, right? So they need to understand the view of each customer, the requirement of each customers, and then to find out if all of the customers are actually in the common chain of what's being supplied by the bank, or if the customers are against something that's being sent by the bank. So That again is a very important thing that you need to check here as well. And then with respect to the e-commerce industry as well, to perform again some analytics in the e-commerce industry, it might be ad recommendations, or there are very big sales which are run by some of the big names in the industry such as Amazon, Flipkart, Myntra, and so much more. So these guys will have to perform extremely heavy analytics on the data that they see based on the products that they sell, and based on the places, based on the city in which the product sells, or if the people are unhappy with the price. Again, performing analytics has just changed the e-commerce industry, if you may, guys. And last most important industry where data analytics has touched is the healthcare industry. This has had the most impact with respect to analytics in the healthcare industry with respect to so many things. Mainly it is with respect to finding out what medication is required by what countries, what amount of medication is working for what population, and so much more, guys. I can probably talk about just the roles of analytics in these industries for days together, and we can still be going on and have a very good discussion of how important analytics has become these days. Again, with respect to insurance as well.
Just a quick info, guys. Test your knowledge of data analytics by answering this question. Which of the following method creates a new array object that looks at the same data? A. View. B. Copy. C. Paste. D. All of the above. Comment your answer in the comment section below. Subscribe to IntelliPad to know the right answer. Now, let's continue with the session.
What geographical location requires insurance, what the audience are, and so much more. So again, as I've said, we can go on talking about this, but then to keep it to the scope of this tutorial, we can just quickly brief through each of these guys. So with respect to the healthcare industry, this is the formal way of going about analytics. The first one is to again analyze all of these disease patterns, analyze all of the disease outbreak that pretty much goes out. We had a disease outbreak a couple of years back, which is Ebola, and so much more. We had H1N1 and so much more, right? To keep a track of all of these outbreaks, this basically again improves the surveillance with respect to health, and then this gives out good responses to the emergency sectors as well, guys. And then development of better targeted preventive techniques, obviously, and then with the development of vaccines, making sure your vaccines again reach your customers, and all of these where you need to reach your customers, or let's say in this case the patients are very important, guys. So identifying the consumers again in this is the greatest risk of business. So identifying certain customers or patients who are at the greatest risk is again, because they might be developing some adverse health outcomes, and then developing welfare programs to keep a track of their health, to track their health on a daily basis, even a weekly basis, monthly basis, to perform analytics on all of the aspects and the parameters that you're tracking with respect to the patients. Again, that is a very important thing. And lastly, to ensure that they can reduce readmissions, because they might know what the cause of an adverse effect is, and if there are 10 patients with very similar symptoms, then you can perform analysis, and you can at least filter out and find out that all of these 10 patients might have this one common symptom associated with them, and this might be the cause of that. So mapping that for every patient is again very important, guys. So coming to the telecom industry, again, telecom industry pretty much goes about using predictive analysis to gain all of the insights that they need to make better decisions, to make faster decisions, and to make more effective decisions. Again, as I was talking about the internet pack example, again, this was very key in that. And then by learning more and more about their customers daily, and the preferences and the needs, these telecom companies can be more successful in this extremely highly competitive industry as well. It's good for them with respect to business, and it is good for us as customers by bringing down the prices again. So it is used for analytical customer relationship management, it is used for fraud reduction, it is used for bad debt reduction, it's used for price optimization, call center optimization, and so much more. So now that you're looking at data analytics in this way, you realize that data analytics eventually has a big play, or has a big say when it comes to any of these business models, right? So again, coming to banking, as I've already mentioned, analytics is making banks become very smart day by day, guys. So it is managing all of the plethora of challenges that the bank faces, and then again, while pretty much going about doing some basic reporting all the way till descriptive analytics, and this is all a must for every single bank, right? Even performing, let's say, advanced prescriptive analytics or so much more, and all these are starting at this age. Banks have started to realize that this will again help you generate very good insights, and this will result in extremely good business impact, and it will help the banks as well. On that note, we need to check out how data analytics is helping in the banking industry as well, right? So it is used to acquire and retain customers. It is used to detect fraud, which is again extremely important with respect to banking. It is used to improve risk control, find new sources of growth for the bank, and to optimize all of the product and generate their portfolio models as well. So as soon as we check out the banking sector again with the e-commerce industry, right? So this is a market which is exploding for the last couple of years. I can say even the decade, right? eBay came up, Flipkart came up, Amazon is again taking over everything, Myntra, Nykaa. Guys, there are so many e-commerce portals today, and to make sure we perform very good analytics on these e-commerce industries is very vital. So how is data analytics used? Again, it is used to improve user experiences. It is used to enhance customer engagement, customize offers and promotions, maintain effective supply chain management, optimize pricing models, minimize the risk of frauds, provide them very good advertisements that pretty much help them pick up products, good recommendation systems where they'll pick up another product after the first product, guys, and so much more. If you've just bought an iPhone, again, you will pretty much be recommended with a couple of cases that the people have bought as soon as they bought another iPhone. So you might be that person, you might like the case and you might pick it up. At the end of it, you have the case to protect your phone. The business just created more money out of it, right? So again, the analytics, the role of analytics in e-commerce industry is extremely vital. Let's say the people in the e-commerce industry have known this for a while, guys. So coming to the analytics in the insurance industry, again, here as well, guys, this is basically used to enhance your customer engagement, acquire new customers, retain the existing customers, make sure the customers don't leave, prevent the frauds, at the end of it, reduce the frauds, prioritize all the claims that need, because you'll have medical insurance, you'll have again health insurances, you'll have life insurance, you'll have so much more that you need to take, and all of these directly impact the user, right? So making sure you take the feedback from the user, work on it, and then create some analytics out of it is again very vital, guys. So on that note, we can quickly come to our case study which I was talking about, and this case study is a very famous one. It's basically the house price case study, and here all we'll be doing is predicting house prices, guys. So we'll have a certain set of data which we will use to predict the prices of the houses. So basically, how can we predict the price of a house? There are so many things that you will need to know, right? You'll be looking at the locality in which the house is present. You'll be looking at the amenities. You'll be looking at the number of bedrooms, the living space, the number of floors in your house, or the number of cars that can fit in your garage, the size of the garage, the quality of the construction of the house, if it has a swimming pool or not, if it has a spa or not. I mean, so many things. If we have to list down this particular use case, then it will be extremely tough, because each one of us has our own judgment of how we can validate a house, right? Because house is something that's very personal to us. Again, the materials of what was used to go to build the house, the style of the house which is built in, the number of if the house has an elevator, how convenient is the house for disabled people, guys, so much more. So basically, we'll be performing exploratory analysis on this, guys. So exploratory data analysis again is used to find a hidden trend in your data by performing analysis on it, and then at the end of it, the trends will be shown as numbers. But since we already know visualization, we're going to be pretty much using these numbers to visualize all of the data for us, and we'll be doing it step by step. So we'll be finding correlation between the data as well. So again, correlation is basically to check how one variable is linked and how the changing of one variable directly changes the other variable as well. So how these two variables are pretty much hung up together, how changing one variable changes the other can be known using correlation as well, guys. So a couple of steps that pretty much is generally followed in the case of performing exploratory analysis. First, we'll be visualizing all of our data, finding the missing values, and we'll be looking for correlations, guys. And then after this is done, we'll be cleaning the data to check if any issues are fixed, or if we'll be checking out if the data that we have is pretty much being used fully or not. And then we'll go about building a model which is used to visualize our result. It will give us the diagnostic, it will give us the residual diagnostic, ROC curves, charts, graphs, tabs, tables and so much more. Guys, I do not want to basically overwhelm you with the use case. So to keep this use case very simple, we'll just perform exploratory data analysis at this stage to find out correlations between the data. And as soon as we go about progressing with respect to our data set and to work with, you will understand how beautiful data analytics is, guys. So let me quickly jump into Google Colab, which is basically a Jupyter notebook hosted on the Google Cloud. And here we can go about performing our data analytics on the use case that I just walked you through. So we're going to need a couple of files to run our use case. We'll actually need one file, which is our training dataset file. Let me just quickly add the file to our Google Colab, and then we can go about proceeding performing our analytics, guys. So this will just take a second to upload the file. Give me a second. We just actually need one file from out here, but then it doesn't harm to upload it and keep it in your runtime. But then you just check the message, right? So pretty much all of your files are recycled as soon as the runtime is pretty much changed. So the first step for our use case is to load all of the necessary files in the libraries that we require, guys. So the first, again, we'll be using pandas to handle all of our data. We'll be using seaborn and matplotlib to perform plotting operations on all of this data, to perform visualizations on all of this data. And the style that we'll be using is pretty much called as the BMH method. And with respect to the BMH, again, BMH is nothing but the Bayesian method for hackers. And this is just a type of a graph visualization method, which gives us graphs which look nicer, and then it helps us to perform analysis better on linear data sets, guys. So the second thing we'll be doing is, again, loading all of the necessary files. One of the important files we need is the training data set, which is this. And here you have the ID of the houses, you have the subclass of where the houses is present, you have the zone in which the house is present, what is the area of the frontage that you have, what is the area lot of your house, what is the street, it's what is the alley, again, lot shape, lot contour, what is the year the house was built in, what it was remodeled in, what is the size of the roof, again, so many conditions out here. What is the foundation made of? How is the quality of the basement, condition of the basement, the exposure to the basement, again, finishing type of the basement. Guys, just look at how expansive this data set is. This is, again, a data set which is extremely popular among us analysts, where we pretty much like to work on this because it consists of everything, and you can perform so much on the single data set and so much more, guys. So on that note, let's quickly find out the information of all the variables that are present. Again, since I was just working with the housing as heating, how is the quality control of the heating? Does it have centralized air conditioning? How is the condition of the electricals? What is the square footing of the first floor, square footing of the second floor? What is the low quality finish that's and how many square feet of that do we have? What's the living space area? How many full bathrooms do we have? How many half bathrooms do we have? Kitchen quality. Guys, this will go on, right? So all these data is what we need to check out. Again, if you see here, all of these are the values that are present which will help us map something. But then Ali again doesn't have many values. You can check out here itself, right? So Ali, it's NaN is basically not a number. So there are not many Ali or details which we can make analysis out of. So we will not require Ali. Again, coming down, not much of fireplace quality as well. We do not have pool quality control at all. Miscellaneous features are very less. Again, even fencing is very less. So the average is somewhere around 1400, right? So to make sure that are cleaning up our data, very important part of it is to basically how we go about doing it. Again, we'll just remove all of these data which are less than 30%. So less than 30% of, again, 1460, and then we can have at least 70% of the data to give us some accurate results, right? So as already checked, alley ID, not every house has an ID, so that's removed. Not every house is mapped to an alley. Pool quality control is not there. Fence is not there. Miscellaneous features are very less. So we have dropped all of these columns, and we'll not be using these to perform our analytics, guys. And so again, to describe what goes on to do a distribution, I hope you guys know this concept about normal distribution. And with respect to all of the details that we can get out of it when we perform the math operation, guys. So basically we can count the total number of data that's present with respect to all the individual data. What is the mean sale price of the data? What is the standard deviation? Let's say the mean of the normal distribution is right at the center somewhere here, guys. So the mean is somewhere around 18,000, right? I'm sorry, this is 180,000. If you just keep tracing from the center point down, this is somewhere where 180,000 exists. analysts, guys. So again, what is standard? Standard deviation is basically the deviation from the mean. So there are house values which deviate from this mean as well. Again, 25% deviations, 50% deviations, 75% deviations. And then what is the maximum sale price of the house as well? So all of these can be found out from this particular graph, guys. And if you can already observe, and even if you're not exposed to a normal distribution, this starts out as a very steep curve, but then it ends out with respect to a lot of data here as well, right? It goes on until 800,000. So basically probably from 5,000 or let's say even 400,000 all the way till 800,000, we call these as outliers. These are called outliers because these are very far away from our normal distribution, and then these actually might not be useful for us with respect to our mean or whatever, and these will impact a lot when we are performing analytics with respect to the mean or the standard deviation or anything for that matter. So we will have to actually remove them and not consider them to basically perform very accurate analysis, guys. So on that note, we can pretty much go on to finding the type of the data set and the type of the data that we'll only consider, because in this particular case, since we're playing with numbers, it has to be the numeric data type, right? Again, as you can check out, we have integer numbers, we have floating numbers, and so much more. So let's pretty much go on to print what it looks like after we have dropped the values where we're not using id, we're not using ali, we're not using so much more, right? So these are all the numerical values that we'll be using to pretty much consider. Again, year built is a numerical value, 2003 is a date, a year, overall condition, overall quality, all these can be rated from a particular scale, right? So again, a square footing is a particular number as well. So the second floor of this particular house has 854 square feet, so much more. So on that particular note, as soon as we check out all of these numbers are present, we can start performing an analysis, guys. So before that, again, we need to just plot all of these to just check what it look like on graphs, because seeing numbers are one thing, seeing graphs on the other hand are something else, right? So pretty much we'll be developing histograms and we can be checking out, guys. So let me just scroll down a little. Yeah, perfect. So with respect to first floor square footing, the mean is somewhere around here, right? So it's around, let's say 500 square foot, 1000 square foot. And again, look at second floor square footing, look at the bedroom average, basement finishing qualities, garages, so number of cars that you can park in the garage, and look at the value here too. So the majority of the houses here have 2 spaces to park your cars. The year that the garage was built in.
Just a quick info, guys. Intellipad provides online data analytics course in partnership with IBM and Microsoft. The course link is given in the description below. Now, let's continue with the session.
Again, the ground floor living area, how many half bathrooms? So you can see 1 half bathrooms. Again, at this point of time, you have certain values at 0 as well. Well, sure, we can consider values of 0 if it's very important, but then since we're talking about sale price, what is present is more important than what is absent, right? We need to have something descriptive for our analytics methods to work. So in that case, we'll have something called as the golden features list, and this variable will basically contains all of the features that will be associating with respect to why our sales price is as high as it is, guys. So this variable called as the golden features list will have all of the features, guys. So basically we're creating a variable where we're finding out the correlation, and then we can already check out the top 10 correlated values which are strongly correlated. By correlated, again, let's say let me give you a quick impact. Basically, we have described this in the descending order, as you can already check out. So the first thing here is overall quality. Again, to transcribe this into literal terms, overall quality of the house, whatever the rating that was given in our data set, is mattering the most of how the houses is being priced. Again, the living area of it, the number of garages you can park is having almost 64% impact of with respect to why the price is like that. Garage area is having a 62% impact. The basement square footing has a 61% impact. And then the year it was remodeled and changes made is having a 50% impact of why the house price, the sales price is like that, guys. So looking at a couple of linear relationships, you can pretty much find out that a lot of values are zeros that I just walked you through a couple of seconds. And look at that. With respect to our, again, the ground floor living area, we have a very little number of zeros. With respect to the sales price, again, check out the basement surface area again. With respect to the total basement surface area, again, even here as well. So look at all these tiny dots which are sticking up to 0 with respect to the sales price. So these have no impact for our sales price because they're not giving us any valid linear data. Look at this again with 0. oh, it is raised up to a lot, about $600,000, right? So all these are not adding any meaning to our data. So if x is equal to 0, again, this might indicate that that house does not have that feature at all. So if this is 0, this house does, like, I mean, a lot of houses do not have pools here. So pool area is 0. So in that particular case, we need to remove all of these zeros so that we can go on to finding more correlated values that we can actually use to go about working with it. Guys, again, here's all of the correlated values that we found as soon as we ran this command. Basically, we are sorting it again in the descending order to find out what helps most. And you can see that it's almost 80% of the total quality of the house, which matters when you're buying because of the price of the house, and people are actually preferring this. Living area, second floor surface area has a 67% chances of affecting the price, and so much more. And check out what the golden features list looks like with respect to all of the strongly correlated values we just found. Again, you're remodeled, you're built, so much more. So total surface area, again, number of full bathrooms, the first floor surface area, the garage area, total basement square footing, the number of cars you can park, the square footing of the second floor, the living area, and the overall quality, again, in this particular order from the least to the highest, is exactly what we're trying to find out with respect to exploratory data analysis, guys. So just looking at the data set, you could never figure out why the list price of a house was so much. And once we break it down into simple terms like this, we can find out that there is an 80% impact from the overall quality of the house, which the user is checking out to just consider the house or not. If the quality is very less, he will not pick up the house. If the quality is higher, then sure, he will pick up the house. So 80% of the reason why the price is set like that is a very important aspect of why the house price casing study is important, guys. Again, this has been a very important, very nice data set to work with, and you will get a lot of analytics that can be done using this particular data set as well, guys. Next up, I want to discuss the skills of a data analyst with you guys. So a data analyst is a person who pretty much works with and creates a lot of beautiful visuals, guys. So to do this, you need to understand the basics of mathematics, because if you have to have knowledge of statistics, mathematics is the foundation to go. And after you understand the foundation, you'll build a step-by-step growth, a career path for yourself, where learning becomes the most important thing, because again, having the knowledge of statistics will help you play with a lot of numbers at the same time. And keeping the math part aside for a second, you need understanding of languages such as Python and R programming language as well. Guys, at this point of time, my goal here is to not overwhelm you. If you do not know statistics, if you do not know Python or R or any of these technologies mentioned on your screen, well, fear not. Make sure to stick with me till the end of the video, and I will guide you on a fast track path to become a professional data analyst, guys. And then the next point we have is data wrangling. Data wrangling again is to have an idea to play around with data, throw the data which is not needed, keep the important ones to know that you can work with. Because if you're working with inefficient data, your visualizations will be really bad. It's like, again, if I bring back the food example, adding a little less salt or adding too much salt is bad as well. And to give you a more clarity of data wrangling, let's say you're preparing noodles, but then if you just put the noodles in, fine, it's working. It's working because you're just making use of the part you'll eat. But what if you throw the entire packet of noodles along with the packet, right? It doesn't make sense if you try to boil the packet as well. Here is where data wrangling makes so much sense in the world of data cleansing and pretty much data processing, guys. So you need to understand your data before you do this. And then coming to a little bit of big data concepts, you will require a little bit of knowledge about Spark, a couple of components and tools of Spark. One of it is Pig, and another one is Hive as well, guys. Well, to break it down a little bit simpler for you guys, let us talk about each skills. The first thing I want to talk about is the analytical skills, because data analysts will work with large amounts of data at every point of time. So what is this large amount of data? It can include a lot of facts, it can be a lot of numbers, it can be a lot of figures, and so much more, guys. This if it is structured data. If it is unstructured data, they can work with images, they can work with audio, video, and much more at the same time. So basically what they'll do is, They need to go through this particular data, they need to understand the data and analyze it to pretty much find some sort of conclusion. So that is a very important skill to have. And then coming to the communication skills, well, again, as I told you at the start of this presentation itself, a data analyst will have to present his or her findings to a non-technical person. So having the communication skill where you can convey all of this really well is extremely important, because at the end of the day, you'll be translating your data, which could be meaningless to someone because they cannot understand it at this point of time, into understandable documents, very good looking dashboards, or again very nice looking reports at the same time, guys. Because again, having a good communication skills will ensure that you can convert a complex idea into something which is easily understood by a lot of people. And this brings us to the skills, next skill set, which is pretty much very important, and this is one among the important skills to have, which is critical thinking skills. Because at the end of the day, again, you'll be looking at thousands of numbers, right? So you need to know where to look, you need to know what to look, what your numbers can do for you, where are the trends, how can you get to those trends, what is your process benchmarking, how can you get to the goal that you set, and so much more, guys. And why is all of this done? Well, all of this is done to make sure that you can have a conclusion to look up to, right? So to simplify it, again, to give you an example, let's say you go shopping for all the food that you have to pretty much cook at your house. So you're going to need vegetables, you're going to need seasonings, you're going to need so many things to cook with, right? You're going to need oil for some dishes. So you will plan, right? So most of us pretty much go out once a month or twice a month to bring out all the groceries and store it. So if that's the case, then you need to understand how much of groceries you need every single month, how much you're consuming, right? So you have to set a goal saying, you know what, this is the amount of vegetables that I'm going to need for this month, and then you're going to plan it and pick it up weekly, daily, or whatever your schedule is. So how do you set that duration of when you should go pick your vegetables? That is exactly why you need to formulate conclusions to understand how you can go from nowhere to there, guys. And then coming to the most important communication skill is that it'll again work together with the critical thinking skill, which will basically enhance the output of you guys. And then the most important thing I want you guys to contemplate about and think about is that data analysis is an art, guys, because you'll be working with numbers, you'll be working with graphs, visualizations, and everything can look its best, it's most beautiful if you know how to create it, right? So contemplate on that for a second, guys. Again, if you have any questions about data analysts, again, guys, I want you guys to head to the comment section.
So Pandas is an open source Python library which is used for manipulating one-dimensional and two-dimensional data. And the name Pandas is derived from panel data, which is a common term for multidimensional data sets encountered in statistics and econometrics. Now let's look at the types of data structures in Pandas. So we've got one-dimensional and multidimensional data. So if you're working on a one-dimensional data set, it is known as a series object. And the two-dimensional data object is known as the Pandas data frame. And if you're working on higher than two-dimensional data, Pandas would create a panel data for you. So let's properly understand what exactly is a series object. Well, a series object in Pandas is a one-dimensional labeled array which is capable of holding mixed data types like integer, string, floating point number, and so on. Now let's understand about data frame. So a data frame is a two-dimensional labeled data structure with columns which contain data of different types. So here we see that we have a two-dimensional data frame where the first and the third columns are of string type and the second column is numerical in nature. So now that we've understood what exactly is Pandas and we've also understood the different types of data structures in Pandas, let's go to Jupyter and start working with Pandas. So I'll start off by importing the Pandas data frame. So I'll type in import pandas as PD. So this PD which you see, this is just the alias. So I am importing pandas with the alias PD. So we have successfully imported this pandas data frame. Now I'll go ahead and create a series object from a list. So let's say I will name the list as data and I will give in these values. So the values inside these lists are 1, 2, 3 and 4. Now to create a series object from a list, all we have to do is use this pd.series function. So I'll use pd.series and inside this I will pass in this list and I will store this in S1, Now let me print this out. Right, so we have successfully created our series object from this list. So we've got these 4 numbers and these are the index values. So what you see over here is the indexing starts from 0. So 0, 1, 2 and 3, these are the index values and these are the actual values. Now let's see how can we change the index of this series object. So I'll just copy this over here, paste it over here again. So we have got the index attribute over here. Inside this, what I'll do is I will give in different set of values. Now let's say I want the index values to be A, B, C and D. So I'll just pass in these values for the index parameter over here and I'll store it back to S1. Now let me print S1 over here. So we have successfully created a series object where the index values are A, B, C and D. Now if we want, we can actually extract these individual elements with these index values. So let's say I want to extract the value which is present at the index value C. So I'll type in S1, I'll put in parenthesis and inside this I'll put in C, right? So I've successfully extracted this value. Similarly, let's say if I wanted to extract the element which is present at index A. So I'll type in A over here, right? Now let's say if I want to extract the first 2 elements. So if I want to extract the first 2 elements, I'll just put in a colon over here. I'll put in 2, right? So I've extracted the first 2 elements. Similarly, if I want to extract the last 2 elements, I'll put in a colon and over here on the left side of the colon, I'll put in -2. So this is how we can extract the last 2 elements from the series object, right? So we have created a series object out of a list. Now let's go ahead and create a series object out of a dictionary.
Just a quick info, guys. Test your knowledge of data analytics by answering this question. Which of the following is a false statement about data analytics? A. It collects data. B. It looks for patterns. C. It does not organize data. D. It analyzes data. Comment your answer in the comment section below. Subscribe to IntelliPad to know the right answer. Now, let's continue with the session.
So let me create my dictionary over here. I'll name this as D1. I'll put in curly braces over here. Now I'll create my dictionary. So I'll just start off by assigning the key value pairs. So A, 1, after that B, it is 2, after that for C, it is 3, and after that for D, it is 4, right? So I have successfully created my dictionary over here. Let me also print this out, right? So these are the key value pairs. Now, again, to create a series object out of this, I will type pd.series and inside this, I will pass in the dictionary which is D1 and I will store this in S2. Now let me print out S2. So this is my series object over here, right? So all of the keys have been assigned as the index and all of the values are the actual values in the series object, right? So A becomes the index value over here, B is the index, C is the index, D is the index, and the value corresponding to this key becomes the value in the series object as well. Now let's say if I want to resequence the index values over here, let's see how can we do it. So I will copy this and I will paste it over here. Now again, I will use the index parameter and inside this, let's say instead of A, B, C, D, I want the sequence to be D, C, B, A. So that is what I'll give over here. D, C, B, and A. Now let me run this and let me just print out S2 over here, right? So we have reversed the sequence of these indices. So initially it was A, B, C, and D. Now I have reversed it and now it is D, C, B, A. Right, so this is how we can create a series object out of a data frame and also change the sequence of these indices. All right, so we have worked with series. Now let's go ahead and see how to create a data frame out of a list. So I'll just write a comment over here, creating data frame from a list. Right, so let me again go ahead and create my list. Data equals 1, 2, 3, and 4. Right, so I have created my list. Now I'd have to go ahead and create the data frame. And to create the data frame, this would be the syntax. So I'll type in pd dot data frame. So over here, you have to keep in mind that D is capital and F is capital, right? And inside this, I will just pass in this list and I will store this in df. Now let me print this out, right? So we have successfully created a data frame out of this list. Now let's also go ahead and create a data frame out of a dictionary. So I will type in fruit over here. So the name of the dictionary is fruit. And over here, I will write the key to be equal to fruits. And the values for this key are, so we've got all of these fruits. We've got apple, we've got mango. After that, we've got banana. And finally, we've got guava. So this was the first key value pair. After that, I'll give in the second key value pair, which would be the count of the fruits. So I'll type in count. And over here, I will just set in the count. So let's say there are 10 apples, 20 mangoes, 40 bananas, and 30 guavas. Right, so we have created a dictionary. Now let me print this out. Now let me also go ahead and create a data frame out of this. So you already know we'd have to type in pd.dataframe, and inside this, I will pass in fruit. And I will store this in, let's say, fruit underscore df. Now let me print this out, fruit underscore df, right? So what happened over here is these two keys have turned into the column names. So fruit has become the column name over here, count has become the column name over here, and these values come into the rows, right? So fruits we have over here, and apple, mango, banana, and guava are the row values. Again, count becomes the column name, and these values over here come over here, right? So this is how we can create a data frame out of a dictionary, right? So now that we've understood the basics of series and data frame, let's go ahead and see how to import a data frame and do some sort of data manipulation on top of it. So I have this customer churn data frame with me. Let me go ahead and import it. So to import a data frame, I'll type pd.readcsv. Now inside this, I will just give in the name of the file. So the name of the file is customer churn.csv, and I will store this in a new object and name that object to be customer churn. Now let me go ahead and print the first 5 columns of it. So it'll be customer churn dot head. Right, so this is our customer churn data frame, and it comprises of all of these columns. So we've got customer ID, gender, senior citizen, partner, and so on, right? So this is a special function in pandas which gives you the first 5 rows, right? So 1, 2, 3, 4, 5. Now similarly, let's say if you want to have a glance at the first 10 rows, you just given the value 10 over here, and you can glance at the first 10 rows of this customer churn data frame. So an analogous function to head is the tail function, which would give you the last few rows. So I'll type in tail over here. Now I'll click on run. So this over here gives you the last 5 rows from this customer churn data frame. Similarly, if you want to have a glance at the last 10 rows, you will just put in the value 10. Right? So these are the last 10 rows present in the customer churn data frame. Right. Now let's see how can we extract specific rows and columns from a pandas data frame. So for this, we've got log and ilog functions. So let's actually start working with the ilog function. So let's say I want to extract only the rows from row number 5 to row number 15, and only the columns from column number 2 to column number 4. Let's see how can we do it, right? So I'll start off by giving the name of the data frame, which is customer churn. After that, I will use the function ilog, and I'll put in a comma over here, right? So whatever is present on the left side of the comma, that denotes all of the rows, and whatever is present on the right side of the comma, that denotes all of the columns. So let's say if I want to extract all of the rows from 5 to 15. So I'll put in 5, I'll put in a colon, and I'll type in 15, right? So I'll be extracting all of the rows starting from row number 5 to row number 15. Similarly, if I want all of the columns starting from column number 2 to column number 5, this is how it will go, right? So let's actually have a glance at this. So this 2 to 5 over here. So since we already know that in Python indexing starts from 0. So 0, 1, 2. So this would be our column number 2, which is senior citizen. So 2, 3 and 4, senior citizen, partner and dependents. Right? So we have extracted column number 2, column number 3 and column number 4. And we have extracted the rows starting from row number 5 to row number 14. Right, so this is how we can extract specific rows and columns from a data frame. Now let's go ahead and see how can we perform some sort of data manipulation. So let's say from this entire data frame, I want only those records where the gender of the customer is female, right? So for this, what we'll do is I'll just start off by typing the name of the data frame, which is customer churn. And then inside the parenthesis, I will give in the name of the column, which is gender. After that, I'll use the double equal to operator and then given the condition, which is the gender of the customer needs to be equal to female, right? Now I'll click on run and let's see what do we get. So you get a bunch of true and false labels. Now this bunch of true and false labels basically means that over here at record number 0, it is actually true. That is, the gender of the customer is female. So false over here indicates that gender of the customer is not female. Here again it is false, here again it is false. So again at record number 4, it is true. That is, the gender of the customer is female. Now what I'll do is, I will cut this and I will paste it back inside this, right? So what is happening over here is, from this customer churn data frame, I will extract only those records where this condition is true, right? And I will store this in, let's say, female customer. All right, I'll click on run. Now let me print out the head of this. Female underscore customer dot head. All right, so we have successfully extracted a subset from the original data frame where the gender of the customer is only female. Now similarly, let's say if you want to do some sort of complicated operation than this. So let's say we want to extract only those records where tenure of the customer is greater than 50 and the internet service of the customer is equal to fiber optic. All right, so now let's start off with the first condition. So I'll give in the name of the data frame, which is customer churn. And inside the parenthesis, I will give in the name of the column, which is tenure. So the tenure of the customer needs to be greater than 50. All right, so I'll cut this and put this inside braces. I'll put the AND operator and give in the second condition. So the second condition is the internet service of the customer needs to be equal to DSL. So I'll type in internet service and this needs to be equal to DSL. Right, again, I'll put this condition inside quotes over here. All right, so we've got these two conditions. And finally, I'll put those two conditions inside the data frame. So what is happening is, from this entire customer churn data frame, we'll be extracting only those records where these two conditions are satisfied. All right, and I will store this in, let's say, C underscore tenure underscore internet. Now let me print out the head of this. So it'll be C underscore tenure underscore internet dot head. All right, so let me have a glance at the tenure. So over here, if you see, the tenure of the customer is greater than 50 for all of these values. So 62, 58, 72, 70, and so on. Now similarly, if I have a glance at the internet service column, then you'll see that all of these values are DSL. Right, so this is how we can perform data manipulation operations on top of the pandas data frame. All right, so we are done with the practical.
So, exploratory data analysis, or EDA for short, is the process of performing initial investigations on data so as to discover patterns, abnormalities, or anomalies and assumptions with the help of summary statistics and graphical representation. Basically, when we have some data on which we want to perform data science and statistical analysis and machine learning modeling, we first need to make sure that we understand what the data represents, shape of the data, what are the different kinds of things that are available in our data, different data types available in our data. If we could visualize our data and understand relationships between individual columns or individual features in our data, that's really good. And all of that and more, such as visualization and all, is done in a step called exploratory data analysis. So that's what EDA is all about. Now, EDA allows us to get a better understanding of our data and make important observations on it. In order to understand this, let's understand with an example. If you have a data set which you have no understanding of, you don't understand what the data it contains is, what do the columns represent, how do the columns relate to each other, and which columns are important for the particular task that you are trying to solve. In cases like this, it is very difficult to understand how you are going to solve the problem, how you're going to build the model, how you're going to perform statistical analysis, so on and so forth. So in this sections, what happens is we would like to perform exploratory data analysis in order to get a better understanding of our data. This also helps us understand whether or not the data that we have needs some sort of boost. So for instance, if we have some data set that's highly biased on one result, for example, we are trying to predict whether or not a particular internship is going to convert into a job. Let's say we have a data set and we want to figure out whether or not we can create a predictive model in which we can feed in some data about an intern and figure out whether or not we should give them a job. Although it's a very specific use case, if all we have is data where people did not get converted into full-time employees, our data set is completely biased, and this is something that we could miss if we don't take time to analyze our data using exploratory data analysis. So if that is the problem, then we would have to get more data so that we can balance out both the probabilities and then teach our model about these things so it has better understanding of what features lead to what results. So now we come to why EDA. Why would you want to perform exploratory data analysis? We've understood what it is, but why exactly would you want to do it? Well, exploratory data analysis is one of the most crucial steps in data science. It allows us to achieve certain insights and statistical measures that is essential for the data scientist. A good understanding of exploratory data analysis process allows us to make some important observations and early decisions that could help us reduce or that could help us not take steps that are not needed. So as we discussed in the previous example, if our data set is biased, then performing modeling and using multiple algorithms and trying to figure out the accuracy of each model is not going to be a good idea, mainly because the data set we have is not good. If you don't have a good data set or don't have a data set that's representative of the reality in the current world, then your model is not going to be good. It's not going to perform really well. So exploratory data analysis helps us perform as fewer steps as possible in order to get the best result. This is why exploratory data analysis is so crucial a step in our data science process. So it performs certain steps to define and refine our important features and variable selection. So it could be that you have a data set that contains 25 different columns, but for what you are trying to predict, only 3 or 4 columns are going to be enough. They explain most of the things or most of the variation in the data or in the column that you're trying to predict. So you only need to use 4 variables. Now, which 4 of those should you use, and if indeed are they 4 variables or are there 5 variables that explain it better? For that, exploratory data analysis is important. It allows us to select features that are going to be useful for us. In case we don't use the correct features, we end up with a model that's highly bloated, contains data that's irrelevant, requires users to fill in data that's relevant, and could lead to incorrect or highly improbable results. So we need to be very careful when we're trying to take model columns or columns on which we are trying to model our data on to make the predictions. Now, why would you want to perform exploratory data analysis with Python? There are many other languages out there, including R. You can even perform exploratory data analysis in JavaScript and Java and C++. So why should you use Python? Well, exploratory data analysis using Python is very easy. First of all, Python is probably one of the easiest languages to get started with. This is why Python is so popular in data science community, because many people who perform data science operations or machine learning operations on a particular data set are people who come from the academic world. They don't have much understanding of what programs are, what variables are, what classes are. They only need to write code to get the things that they want to get done be done. This is where Python comes into play. It fills the gap. So since Python is so easier to use, and another advantage that Python provides is that it has a number of libraries that allows us to perform tasks related to exploratory data analysis. In case we are performing these tasks ourselves, it's very, very important for us to make sure that the libraries we are using are trusted and used by multiple people, because if it's a library that someone has created, our confidence in it is going to be really low. For example, if it's a library to perform data visualizations, but it's a library that not a lot of people have used, then you cannot be sure that the library is going to give you accurate visualizations, and it's always going to be a bit problematic. In Python, however, there are libraries that have been used by millions of developers and academic people. What they do is they just understand the basics and then they import the data and visualize it and perform the task that they need to perform right at the step. And that's really important for our data set. So this is why Python is such a good candidate for exploratory data analysis, mainly because it's easy to understand, easy to read, it's got a really clear syntax, as well as because it's got so much good tools and libraries around exploratory data analysis and data science in general. It's just a really good experience for developers or people who are getting started with exploratory data analysis or data science, or even professionals. Now, Python has libraries to perform all kinds of tasks relating to exploratory data analysis, such as visualizations analysis, etc. Visualize the data, there are libraries available, not just one library, but multiple. Depending on the features that you're trying to use, you can import either one of the libraries that are available. There's libraries for data analysis, libraries for numerical manipulation. There are libraries for many other different kinds of tasks, such as creating neural networks, defining the structure of a neural network, visualizing neural networks, so on and so forth. So this is why Python is so popular. Now, some of the most popular libraries to perform EDA are NumPy, Pandas, and Matplotlib. Now, since I'm assuming that many of you are beginners and you have no understanding of what these libraries are, we will cover what these libraries do in a later point in the presentation. Also, again, if you wish to learn more about these libraries and more about data science and exploratory data analysis and Python in general, stick with us till the end of the presentation and will help you guide you through some of the resources that can help you out there. Now let's take a look at some of the advantages that exploratory data analysis provides us. So it provides us with several benefits. First advantage is that it allows us to spot missing data. Using exploratory data analysis, we can easily find null and missing values. So in case we have a data set in which certain columns have null values or certain columns have certain proportion of the data is missing, we can remove the data, we can fill the data. Although removing the data and filling the data is not part of exploratory data analysis, spotting the missing data is definitely a part of exploratory data analysis, and it allows us to do the same. It allows us to find the underlying structure of data. So on the surface, what we can see is the number of columns, the columns that we have, and the data that we have in them. Underneath the row and columns and the tabular structure of our data, if indeed it is tabular, what we can do is we can understand what the underlying structure is. Underlying structure means what are the different data types that a particular column holds. Are they in the correct format to be processed? What is the range of data that is contained in a particular column? Do columns relate or correlate with each other in the data set? And if so, is it helpful or harmful for the task that I'm trying to perform? So on and so forth. Then there's variable importance. Exploratory data analysis helps us to figure out which variables in our dataset are the most important ones. So in that case, it helps us understand which variables have the highest influence on the thing that we're trying to predict or on the column that we're trying to predict. That way, we can just drop the rest of the columns and only use the ones that have influence on our columns above a particular threshold. And finally, data visualization. Now, we can sit and talk about data a lot, but one of the issues that exploratory data analysis solves is that when we show these statistical measurements to people, first, especially people who are not statistically literate, it's going to be really difficult for them to understand, mainly because they have to firstly scan through the data, then understand which data has higher value, which data has lower value, and then understand the implication of each of them. It's much easier to visualize this data and understand the characteristic of the data that we possess. In this scenario, exploratory data analysis is really helpful. It allows us to perform visualizations and explain our data in a better capacity, even to people who may not be that familiar with the data that we have, as well as the statistical analysis that we are performing. Now let's take a look at the libraries that we had discussed earlier and what in exploratory data analysis. I would just like to mention that these are the three libraries that I have picked. These are the most one or at least some of the most common libraries that are being used. Not necessarily the case that these are the only libraries that will be used, or also not necessarily the case that these are the libraries that are going to help you in a particular problem. It could be that there are better alternatives available, and to understand about the alternatives, you need to firstly look at all the options that are available. So I recommend before starting any exploratory data analysis process, take a look at the tasks that you want to perform, take a look at the libraries that are available. These libraries are the most popular ones and for good reason. So these should help you out, especially if you're a beginner. But as you become more and more advanced and more into the exploratory data analysis and data science community, you understand that there are better tools available for the one particular task that you're trying to perform, and it's better to use those tools. All right. So the first one is NumPy. NumPy, or many people call it NumPy as well. It is a numerical manipulation library. In Python, we can perform numerical manipulation using raw Python itself, but it contains a lot of the information that are not relevant for our purposes. Since Python is an object-oriented programming language, which it's fine if you don't understand what that is. But in case you do understand, it stores a lot of information that's not relevant. So when we try to perform complex mathematical operations, those properties about the object orientedness of the particular variable come into play, and they negatively affect or negatively impact negatively impact the performance. So in situations like this, NumPy is quite useful. It firstly just keeps all the relevant data. Secondly, it has a lot of functions that allow us to perform these numerical manipulations. Inbuilt functions for calculating the sine waves, the cosine waves. For fast Fourier transform is also available, and many different kinds of numerical manipulations that are difficult to implement by hand are already implemented in NumPy. So you don't have to worry about implementing these things. You just have to worry about using them when the need be. Then there's Pandas. If you have done data science with Python for any period of time, Pandas is a library that you must have come across. Pandas is great for data analysis, data summarization, and many other tasks relating to data. It allows us to load data in our Python program using something called data frames. Data frames is a special object or a special way of representing data in Pandas, and it affords us a lot of benefits. It allows us to perform a lot of complicated tasks on our data, such as joining two data frames, filtering a data frame, manipulating data, dropping data, and a lot of different kinds of tasks that by hand are going to be very difficult. So it's a layer of abstraction over these complicated tasks, so you can perform them yourself, and it's very efficient as well. Then we come to Matplotlib. It is a visualization tool, or it's a visualization library, allows us to create charts and graphs, and allows us to perform a lot of visualization. Many different visualization libraries such as Seaborn use Matplotlib underneath the hood. So in case you wish to become a data scientist and want to perform exploratory data analysis by visualizing the data, Matplotlib is a library that you might need. You can also use other libraries, but Matplotlib is probably the best one to start with because it's very easy. It exposes you to some of the fundamental concepts that you need to understand when you are dealing with in Iron Python visualization or graphs or charts. They can help you out with that. All right, so we have reached the demo section. Now for the demo, I have already written the code so that I don't write the code and you have to then follow along and look at the errors that I make. I'll explain the code to you now. I told that you only need to import the libraries that you need. In the current scenario, I didn't need to use any numerical manipulations because the data is already manipulated for me. Then I can use this. I'm using Pandas, Seaborn for interactive visualizations, and also Matplotlib. These are two different visualization libraries Seaborn is great for creating summarizations of our data sets, and matplotlib is great for visualizing individual columns. This bit of code here is telling the Jupyter notebooks. Let me just zoom in on it because it may be possible that you guys aren't able to see this. Now, in matplotlib, it's possible to use it with multiple backends. In this scenario, we're using it with Jupyter Notebook. We're just trying to tell matplotlib that whatever visualizations that you produce, make sure that they are optimized to be rendered inside a Jupyter Notebook. Now, many people say it's not necessary to do this step. It was necessary previously, but now it's not. But I like to keep it in just in case. Then I am importing a data set. And to give you some context, this is a data set that I have downloaded from Kaggle. You can download it yourself. I would recommend it that you do it afterwards, and you can play with it as well. This dataset and many other datasets are available on Kaggle for you to perform exploratory data analysis with. You can do it on Kaggle as well. And when you're doing it, you can, using that exploratory data analysis notebook that you have created, you can share it with people. Kaggle is a great platform for that. So you can use it for that. And now we take a look at the first 5 columns, first 5 rows of the data. Now, as you can see, the shape of the data is 5 rows in 81 columns. Now, 81 columns is probably a lot. As you can see that even our pandas library is refusing to show all of this because it knows that it's not possible for us to show everything. So we have this. Now, we take a look at the information of the data. This tells us about the data set that we have and gives us information about each column, right? So we have 1460 non-null columns, non-null data points with of type int 64 in the ID column. And you can take a look at everything. Here, as you can see, in the alley column, we only have 91 data sets. That means that majority of the data is null. We'll deal with that in a moment. As you can see, the data is quite disparate. Sometimes it's 1460, sometimes it has 1452 data points. So we are dealing with a data set in which we can have null values quite a lot. For instance, pool QC has only 7 values that are not null, others are all null. And as you can see, the data set is quite disparate as well. Some are objects, which are basically string or some other data set other than numerical data set. Some are integers and some are float. Float are basically real numbers. These are numbers with decimal points. So currency could be considered float, and real numbers are considered integers. So your mobile number could be considered an integer because it's not going to have a decimal point in that. Right. So I don't want you to get bogged down into the specifics of the code. What I'm trying to tell you is how we are going to do this. So here what we're doing is we are taking all the columns in which our data is greater than or equal to 30%. So any column that contains less than 30% data, which is it has 1460 columns, but only 30 or less percent of the values are present in that, and we are going to drop it. So any column that contains less than 30% of the data, we're not going to consider it at all because it could have negative implications. So we do that. Now what we do is we also delete the ID column from our data set, mainly because ID is just something that is generated by the database in which it was stored, or maybe not by the dataset, but by the people who.
Just a quick info, guys. IntelliPad provides online data analytics course in partnership with IBM and Microsoft. The course link is given in the description below. Now, let's continue with the session. Just a quick info, guys. Test your knowledge of data analytics by answering this question. Which of the following method creates a new array object that looks at the same data? A. View. B. Copy. C. Paste. D. All of the above. Comment your answer in the comment section below. Subscribe to IntelliPad to know the right answer. Now, let's continue with the session.
Collected this data. It's not really important for us. It's important for storing the data, but for analysis of the data, ID is just a number that was randomly assigned to a person. It has no significant value. Now we will print the list of columns that were dropped. As you can see, alley, QC, fence, and miscellaneous features are the columns that are dropped. ID is the one that we have dropped manually, even though it contained a lot of data. Now we try to do two things here. First thing, we take a look at the sale price, which is a column that we are very interested in because that's the column that we're trying to model our scientific process across. So we describe the data, which is we count the number of columns As you can see, it contains every bit of data that is available. The mean is 1,80,921 point some value. Standard deviation, minimum value 25 percentile, 50th percentile, which is here, then 75th percentile or the third quartile, and the maximum value in the column. This is, by the way, this is something that Pandas is doing for us. We didn't have to write functions to loop over the data and figure out the min, max, 25th percentile, and all of that. So it tells us the name of the column, sale price. Data type is float. And now what we do is we try to visualize it. So as you can see, the majority of our data lies in this region. Yeah. So here and here. This is what is known as a histogram or distribution plot. Since Seaborn allows us to do it pretty easily, we do it. Don't worry about the code. Stick with us till the end of the presentation and we'll show you how you can learn to write the code. Right now, we're trying to understand the process of exploratory data analysis. So as you can see, even though we have a maximum value of 77,55,000, majority of our values are lying between somewhere around these values, right? Now we take a look at the different data types available in our data set. We have integer, we have O, which stands for object. Object basically means that this is something that's not a number. And we have float. This 64 is basically how many bits are used to represent the data. This means that the data could be of high size. You can, by the way, change this all yourself. So here what we do is we say, okay, give me all the numerical data that we have. This is done mainly because we want to be sure that we are only dealing with numerical data. Dealing with data that is not numeric, firstly we'll have to convert the data into numerical formats and so on and so forth. So we're trying to firstly estimate the task ahead of us. We take the numerical data that contains float 64 and int 64, basically not selecting the object data types. We take a look at the head. As you can see, it has 37 columns, which is a massive drop from what we had earlier. Earlier we had 81 columns, out of which we dropped, I think, 4 or 5 because they had a lot of null values. This one is by far something that we have done only to understand what the data is about. Now we take a look at the distribution of our data using histograms. What we do is we basically create a histogram for all the columns. So again, we didn't have to do it ourselves. These are all 31 columns with histograms, and you can take a look at the data. As you can see, it contains a lot of data. Some columns contain a lot of data that's centered around a particular data point. Others are very separate, such as this one. This only contains values that are 0, so that's fine. And you can take a look at the data and analyze it. We're not going to analyze it right now. This is just for you to understand how to generate these visualizations. Then we take a look at correlations. Correlation basically is a number that allows us to understand how how much of our data is how much influence does one column has on a particular column. And we remove the last column because the last row is basically sales, or the last column, sorry, I'll just remove the comment. So the last column is sales, so we don't have to worry about that. From here, we basically just take all the columns with correlation greater than 0.5. We call them golden feature list. Any column that has a higher value than 0.5 on correlation means it has good correlation for our data. We're taking the absolute value, which means we don't care whether it's negative or positive. Correlation ranges from -1 to +1. -1 means if the data in this column decreases, data in the other column which is negatively correlated with it will increase. Positive correlation means data in this column increases, data in other column which is positively correlated with this increase. So we take that and we sort it in ascending values. Now after doing this, we take a look at the correlations. So these are the correlations. The highest correlation we have is overall quality and GR live area, which is around 80 to 70%. Now what we can do is we take a look at all the numerical columns and we generate for the first 5 months for all fifth values. What we're trying to do is we're trying to create visualizations to understand how a particular column relates to first 5 columns. So for instance, sales price relating to MS subclass, MS lot range, lot area, and so on. And as you can see, we're doing it for everything, and we're doing it 5 plots at a time. Now that we have done that, here is a bit of a code that's going to be a little difficult to understand, so I'm not going to try and explain it to you. But basically here, what we're trying to do is we're trying to create individual data frames or individual feature data frame, as I've named it. Create some temporary data frames based on particular sections, such as we take the column name and the sales price, and then using that data frame we check whether or not the column's value is not equal to 0, and we create or we add it to the data frame. Then we create an all correlations matrix, and then we try to print it. Now we come to the interesting part. So these are all the 11 strongly correlated values that we have, right? For this one, since we had 81 columns and now we have reduced it down to only 11 columns that have really high influence on our sales price column. Now to visualize it, what we have done is we have created something called heat map. Let me just zoom in so that you guys can see. I think I zoomed in a little too much. Yeah, and also you can manipulate the size of this plot by when you're writing code. I'm not going to do it right now, but as you can see that some columns have correlation of 0.4, some have, and this is negative, by the way. As you can see, these are color coded. So any column with light color such as blue or purple are negative. Any columns with light the colors such as yellow or green are positive. As you can see, we have 0.83% of correlation with GR11 area and fireplaces. And so this allows us to understand what are the particular columns that are highly correlated with each other. Allows us to understand whether or not a column has influence on not just one column but multiple columns, and how does that affect our purposes.
We have a fancy thing called package in Python. Okay, so those packages are available for free in the market. It has a lot of built-in functions and built-in things that will help you guys to write many codes easily, okay, without going for the detailed algorithm and all. So in that way, these packages are really helpful. So NumPy, what it does, it is used for mathematical and logical operations on the arrays, okay, and it provides feature for multi-dimensional arrays also. So again, when we tell arrays, Python doesn't have any array, it is built on list only. So basically, when we go through NumPy, when we go for indexing, slicing and all those kind of stuff, it will only be the list. Everything will be based on the lists. So that's how it goes. Okay, so NumPy can support 1D 2D both of the kinds of arrays. Okay, and I think you might be using this Anaconda version of Python, so that will be coming along with pandas and I mean NumPy version pre-installed. Okay, NumPy will be pre-installed in the Python versions. Okay, I mean Anaconda Python. Okay, now when you use a package, right, what we do, we import the package. Okay, we import the package with something like the syntax is, it can be any package. Okay, alias can be anything. So what is the syntax? Syntax is import, then there will be package name, then there will be as keyword just to assign an alias, otherwise you would need to type the entire thing throughout the program, and then we will have alias name of np. Okay, so that's what it was. Okay, so now when I say NumPy array, it can convert anything, any Python data structure to arrays. Okay, so that's how it works. Okay, so if I show you like this, why it is taking time now? Yeah, so see, it has converted both these things. So the first one is a Python list, second one is a Python tuple, right? So when we pass that argument, that tuple or a list to a NumPy array function, it converts them all to a NumPy array. Okay, so that is what this returns. Okay, and whatever we provided, as you see, the outputs are starting and ending with square brackets, right? So that means it is already converted to a list. Now we can perform various functions in NumPy. Yes, so once we have NumPy array created, it can be editable. Okay, because it's a list now, it's not anymore a tuple, so that's how why it is editable. Okay, and NumPy doesn't come by default with Python. If we want to use it, we need to install it. So let's say you are not using Anaconda and you are using this kind of a Python user interface, then what you need to do, you need to install it using command prompt. Okay, pip install, sorry, I am getting it again and again, pip install numpy. So it will find it and it will install numpy. Okay, I don't have this pip version set, so that's why it is not working, but it should install it. Okay, so that's how it works. That's how we can use numpy in this kind of functions also. Okay, now we can have 2D arrays in Python also, like 2D arrays in numpy also. So how we write it? We write it like this. So we just need to pass 2D arrays. So 2D array means two lists, right? We can pass two lists. So it will be concatenating it to 2D array. Okay, so it will be changing it to 2D array. So that is how we write it in NumPy. That is how we create arrays in Python. So that's how we do it. So now next will be where it is where it is advantageous rather than using a basic Python list or Python like that, Python list or Python tuple, right? So by NumPy you are changing, yes, so we are changing data type from mutable to non-mutable. It's the other one, right? Next is nd array object. Okay, so in NumPy, as I have shown you, 2D arrays, right? It can go up to n and then can have any number. So in real world, if you ask me, we don't use more than two max to max 3D arrays, but yes, it can go up to that. Okay, so like that it works. So next is like why we use NumPy arrays. So in NumPy, this nd arrays will have all the items of same type. Okay, so it can't be one of them is int and one of them is string list. It has to, all of them has to be int arrays. Okay, like that. So items can be accessed using zero based index. As you know, Python arrays, Python lists also starts from zero indexing, right? So here also it remains the same property. It has zero index. So if we go for NumPy array, then if we want to see the first row, it will be like this. So it will give you the first row and this will give you the second row, right? Similarly for columns, if you want to see if you want to see the first column, you need to do this, right? Sorry, so you need to do this, so you will see the entire values. If you need to see the only the first column, then you need to do it like this, like that it works, right? So that's how it will be working. Now for 2D arrays I will be coming, okay, I am working on 2D array, sorry I forgot. So that's how it works. Okay, so we will be coming to that in a few minutes. So 2D arrays I will show you. So for others, what was the names, A and B, right? 2D arrays I will be showing you, not an issue. So for arrays, if you see 1D array, it will give you A0, that will be 1, A1 will be 2, like that. And if you do 1 to 2, then it will be printing only single element, because the right hand side index is always left. Okay, right hand side index, it is not up to, it goes up to that. It is not including the right hand side index. So that's why it has two elements. Now if we do this, then it will print whole. If we do this, that also will mean the same and it will print the same. It is pretty basic, pretty much like the lists that we have in Python. Okay, now NumPy arrays are beneficial because it takes up the same size of block in the memory for all the objects that it stores. Okay, this part we will see a comparison in the later half of the section, and then we can understand like where it is beneficial rather than storing it in a classical list than NumPy array. Okay, now next is, if you go into check the individual, yes, right, so it will be begin colon n minus 1, that is how. So right hand side will always be excluded, like that. Okay, next is NumPy array initialization, right? So how do we initialize NumPy arrays? As we have already seen, right, how do we do that, but still this is how you do it. Okay, so initialize means what we want to do is, we don't want to place any list in there. Okay, but what we want to do, we want to have some by default values. Okay, default arrays we want to take it up. Okay, so let's see how we do it. Okay, first one is, we will, I mean, if you guys are familiar with the terms like masking and all, that is for image processing, and for data processing we will do that. A lot of times we will do that. Okay, so a lot of time we will be using this zero based or one based indexes. Okay, so for creating a zero based arrays, right, what we need to do, we need to have some sort of like some shape of zero arrays. Okay, so that's how you do it. Okay, that's how you do it in NumPy. So what you do, you write np.zeros, then you specify the dimension of the array. Okay, 3 by 4 means it will have like 3 rows and 4 columns. So first one is of, so you can think it like this, it will be np.zeros, then row comma column. Okay, that's how a tuple you need to pass it to. Okay, that's this kind of tuple you need to pass it to the Python arrays. Okay, so that's how it works in Python, I mean in NumPy. So that's how you print zero arrays in NumPy. Okay, next is if you want something with an interval, right? So how you do, you write like this, np.array, within bracket we pass, so it will print you another new array. So what we are doing, we are sorry, in here what we are doing by array, yeah, so in this what we are doing, we are, yeah, right, it's arrange, so it's a range actually. Okay, so what we are doing, we are passing 3 variables. First one is the starting number, second one is the ending number, and last one is the line is the interval that we want to print. So from 10 to 25 we are having 5, we want lists to be 5 separated, right? So first one and second one difference will be 5, like that. So that's how we have, so we have 3 numbers, right? 10, 15, 20, and always remember the right hand will be excluded, so 25 won't be taken up. So till 20 we will go. Okay, till 20 we will print it out. Okay, so that's how this kind of arrays are getting printed out in NumPy. Next thing is this arrange is done, right? Now let's say we want we want to spread some points over a straight line. Okay, so how do we do it? We want to I mean what I mean is, if you think of a 2D plane, right, like x and y plane, if you think of, and we want to spread some points along that line. Okay, so what we will do then, like we want some points between range A and range B. Okay, so here we are giving intervals, right? So we need to calculate the interval, we need to calculate the point difference and all, then we need to provide it here. So that's how it works, right? But we don't want it, we want it otherwise. Okay, we want it to spread along a line like this. So
Have a look at this chart over here. Now let me ask you, what is wrong with this chart? Take 3 seconds to think about this.
Hello anh em, số Hana đang 258 đô. Hôm nay mình sẽ review cho anh em cách mình kiếm một son đơn giản như thế nào anh em nhé. Ok. Hôm nay là mình đang dùng con bot là MAE Extra Bot. Lý do mình dùng con bot này đó là nó tự động chốt lãi và cắt lỗ. Ok, mình vào luôn review những lệnh ngày hôm nay anh em nhé. Xem này mình thắng bao nhiêu anh em nhé. Lúc 12 giờ 20 mình có mua một son con Swiftler thì mình có lãi 30% và chốt lãi ở 12 giờ 25 phút là 1,31 son. Ok anh em nhé, xem giá con này đẹp không nào. Giá 43 nếu
nâng cấp cách bạn giao dịch với ứng dụng di động Exness. Giao dịch với khả năng khớp lệnh nhanh chóng và nắm bắt cơ hội trong chớp mắt bất kể khối lượng lệnh của bạn lớn hay nhỏ.